You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Despite all these risks that you are talking about, macroeconomic risk, geopolitical tensions that you can feel all over the places, but still Hugo Boss is very strong at this moment. We are still expanding retail-wise. We still see a lot of opportunities in the American markets, especially in the US and the South Belt. In China, we see more potential. So we are growing our retail space. So especially in the metropolitan cities, big cities like London, Paris, Tokyo, Shanghai, New York.
Yves Muller, he is the Chief Financial Officer of Hugo Boss, and I just really can't say enough about this, the mystery of luxury, and given what we see across this world. Speaking of luxury, Apple this afternoon, it's a luxury item. I don't care what you say. Brammo was in the store like a couple days ago and had to unload on the various cherubs, and I think they had to mortgage the house or something just to get out of the place.
They all got the iPhone 15 Pro Max?
Yeah, and there's like shades of luxury, and the optimists like Dan Ives at Wedbush would say, there's all this gloom about Apple, but like Hugo Boss or the others, the very tippy-top product, the iPhone 15 Max or whatever, is going to be gangbusters.
It is gangbusters in the U.S.
I don't have an opinion on that.
Yeah, the big question is whether it goes gangbusters in China, and the early indications are maybe not, because people are going gangbusters for the Huawei Mate 60 Pro.
Some of the distinctions here of luxury, we'll cover that. We've got a great team in London working on that as well. Market check, every time I look, it goes up. It's the foo phenomenon. Up 26 on SPX. I think we were up 18, 19 earlier, up 0.6%. We're going to get up a stick on NASDAQ 100. A little bit of short covering, Scarlett. What do you think?
Yeah, maybe, but it's more resilience after the. Did Powell say anything new? Maybe the fact that he didn't say anything new was what encouraged everyone.
Yeah, well, I think we'll just have to see. It's a hard thing for me. And, they called me up and they said, we'd really like you to go out to Hulu and do Dancing with the Stars. And I just said, yeah, but I don't dance. And they said, that's why we want you on. You're the comedy act. I mean, people are watching Dancing with the Stars or whatever on Hulu.
They're watching The Bear. They're watching all kinds of shows. I don't know. You have to pay for it. You have to watch horrible commercials. So it's not one of my favorite streamers. What is their
theme versus Netflix or Disney Plus? How do you, I've asked Farrow this because he loves Hulu too. How do you identify Hulu versus the others?
It's show by show, but it's also, they have shows from the past. So they have this library that you can access.
I'm looking for
It's complicated, though.
It's very good. We're going to get complicated here and straighten this out. Hulu being taken out by Disney. Brian Robertson, Comcast, unloading the dog. Geetha Ranganathan of Bloomberg Intelligence is truly encyclopedic on this near $9 billion transaction. Geetha, I'm lost here. Is Comcast happy today? that they unloaded this stock, or is this a deal of a lifetime for Mr. Iger?
So this is, as you just pointed out, Tom, this is a pretty complicated transaction. All that we got yesterday was that Disney is definitely buying out Comcast's 33% stake. So Disney already owns 2/3 of Hulu. So we know for certain that Comcast is offloading it, Disney is buying it. Now, the biggest question here is going to be price. So we know the floor value was set at $27 billion. Disney actually came out yesterday saying that they do expect to make that initial payment of, it's actually $9 billion minus some capital calls, which is why you get the $8.6 billion.
Right.
But really, the point is going to be how much greater than $27 billion is the valuation going to be, and that is where all of the complexity is going to arise over the next few months.
I mean, John Farrow's addicted to Hulu. He's just, he like binge watches Love Island USA and the rest of it. Geetha, does it matter who watches this stuff in this transaction, or is this just people distant from what we watch every day?
I mean, Hulu has 48 million subscribers, Tom, so it is a very, very successful streaming service. You're absolutely right. It has a very deep catalog of classics. It has
like
also
Love Island USA. Geetha, you're not going to sell Surveillance's audience that Love Island USA is a classic. Continue.
Well, it has a lot of the must-watch shows, right? You brought up The Bear, Only Murders in the Building is a great show. It has a lot of shows that come up from broadcast TV, so it's a great catch-up service. And it also has kind of this live Hulu plus live option as well. So there are a lot of different flavors that it offers. But I think the biggest thing for Disney is really the ad component of it. If there is any streaming service out there that has got advertising right, it is Hulu. We know that Netflix is struggling with that right now. So is Disney Plus. So are a lot of the established services. Amazon is looking to bring an advertising service. Hulu is the one established brand already bringing in about $3.5 billion in ad revenue. So that infrastructure is a gold mine and is super valuable to Disney.
And for that reason, Hulu is one of the few profitable streamers. Netflix, of course, another profitable streamer here. But what is it about the ad packaging that Hulu has figured out? As a consumer of Hulu, it's really frustrating to see the same Tom Brady Hertz commercial over and over again.
No, you're absolutely right. But at the same time, I mean, this is a company, obviously they are the ones that have ads, that have had ads on now for the longest period of time. They've built they've built a very, very robust ad stack. And they've also kind of made all these different, relationships with advertisers. Of course, you have the larger Disney brand as well at work there. But that is something where they've really been able to crack the code. I mean, Hulu is one service where you have majority of, the consumers on the ad-supported option, which is what has made it such, so successful in what it set out to do.
Disney says it has enough cash and credit to buy Hulu, whereas Comcast will be using the proceeds to accelerate its stock repurchase program. When this financial transaction is completed, does it move the needle at all for either Disney or Comcast stock?
I think it definitely moves the needle for Disney because this removes a key overhang. Remember, there are so many strategic questions that are still kind of pending for Bob Iger, whether it's the future of ESPN, whether it's the sale of the ABC network. And so, kind of just closing this deal with Hulu and then integrating it with Disney Plus, I think just removes a key overhang for the stock.
5 years out, do they mate? Do you see Hulu combined with Disney Plus to really take on Netflix as a combined adult and kids entity?
Absolutely. I think that is what the plan is. I mean, at the end of the day, they are looking to get synergies across the board in their streaming product because Disney Plus is still losing money. It is still going to lose about $2.5–3 billion this year.
Right.
But I think when you combine this, we're looking at savings of at least $1–1.5 billion. So I think it's definitely going to accelerate streaming profitability for Disney.
Synergy to me means rebundling. So you're going to have to pay some big, heftier price to get all these different channels or streamers into one again.
That's what Paul Sweeney would say as well. What I'm fascinated by is when we're all said and done with this, I mean, there's Hulu and there's Disney Plus, and they're going to merge and they're going to take on Netflix. Geetha, do you see a true duopoly out there? Is that where streaming is heading?
It definitely is heading there, Tom. There's no doubt about it. I mean, Netflix is far ahead of the competition. They have almost 250 million subscribers. We do see them getting to 300 million over, maybe the next few years. But yes, this is kind of very much turning into, Netflix versus Disney versus most probably Amazon. So yeah, maybe a duopoly, a
HBO
triopoly.
Max?
HBO, that's a tough one. HBO Max is probably
brutal. She's just
probably going to be a second-tier service.
Second tier.
Look at her. She's just like
wow.
What's so bad about that, and this goes with Discovery Plus and Max and all that, is where am I going to see 90 Day Fiance?
I know you're addicted to it.
If it doesn't work out. Geetha Raghunathan, thank you so much. I think I learned something there. On Hulu, I don't have Hulu at home.
The Great is another
one day I was
one
trying
that
to
you should
figure out
watch.
how to give him my money, and I couldn't figure out how to give him my money. I just gave up.
They make it easy for you to give your money. They don't make it hard for you to give your money over.
I don't know. Have you ever added up all this streaming stuff?
No, I'm scared to actually.
Yeah,
because
what
the list just goes
we used
on.
to pay.
I just realized that we have YouTube Premium as well so that my kids can watch YouTube without the commercials, without the ads, which
I'm humbled by the
outrageous.
collapse of Disney. I really am. I mean, Disney's what you bought your kids. You bought them 3 shares of Disney so they, you'd get a certificate with Mickey Mouse on it and put it in their.
Well, Bob Iger is humbled as well. He's got a lot of work to do this time around.
What does he do with ABC? I mean, that's like a TV network.
He's looking to sell it. I don't know who's buying right now.
Who's buying it?
Yeah.
Who do you? I think that's a key idea. It's sort of like American housing. You got to find somebody to buy this stuff.
Everything's frozen in place right now.
Yeah. Well, that's.
We have a lot of data coming up. Did you know that? In just over 30 minutes.
In 4 minutes, we have Lizzie from London.
Bank of England decision.
Bank of England.
Yeah, it's probably going to be a bit of a snoozer. No change to the rate for a second straight meeting.
She stands out there in front of the Bank of England, in front of the gorgeous whatever it is, the famous building there. She gets a more British accent when she does that.
Oh, I see.
It's very British. I don't know where she is now. If she's in the office at Queen Victoria Street or not.
I did hear her say "boot" and "kut," and I can't
I have no
imitate,
idea.
but
It's like Pharaoh. About every fourth word, I'm like, what? What did you say, John? The Bank of England, it is coming up. It is not a routine matter. We do this with futures advancing, up 24. Good morning.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business,
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
as they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
Insight
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
how do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We could be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1/4 point move is just going to be sufficient to do the job. So I think it's either zero or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Bloomberg Surveillance, Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We need Farrow now. He's lost in space somewhere. Bramo's out today. Scarlett Fu and I are here. We're looking at Bank of England. We don't know the headlines. We're going to go to Lizzie Burden in a moment. But what you need to know is sterling advances off the headlines. And there is Governor Bailey. Scarlett, it's just simple as this. Bailey, much too early to be thinking about rate cuts.
Yes.
That's in English.
Similar to what Jay Powell had said as well. We're not even talking about that. We're not even thinking about that.
They're the headlines this morning here, and of course market reaction. We still see U.S. futures to sustain, but sterling 121 goes to 122. We need help with this, and the best help we can have is Lizzie Burden in London. Lizzie, I'm lost in translation here. This seems to be a strident Governor Bailey this morning.
Well, Tom, the Bank of England has done what was expected. It's held rates, as you say, at 5.25%. So they had been guiding that we were at the top of Table Mountain, this flat peak where rates were going to stay, and it looks like we're there. The vote split was expected to be 6-3, and indeed that is what it is. It was 5-4 last time. And really, the market has been looking for any reason to take this as a dovish hold. You mentioned the pound. It's actually stronger against the dollar off the back of this, stronger 0.4%. If you look at the market reaction, you've got the 2-year gilt yield down 5 basis points at 4.74%. Andrew Bailey has made it very clear here that it's far too early to be thinking about rate cuts. So really echoing Christine Lagarde there, right. It's premature to be talking about cutting now.
And Scarlett, what we saw in Europe is, well, the Bank of England cuts their GDP forecast. And this is critical for Q3 when the U.S. had a blowout quarter, but for third quarter and fourth quarter this year. So you're doing this into a more tepid economy.
In fact, the BOE also sees a 50% chance of a UK recession in its forecast period as well. Lizzie, there's always accusations of groupthink at central banks, and you mentioned the vote split this time around was 6-3 versus 5-4 last time. Clearly, you can make the argument that there isn't groupthink at the BOE. How does that show up in policy?
There really isn't at the Bank of England, and you can expect that the vote split actually masks a little more of the debate that's happening over on Threadneedle Street. The internal members tend to vote together and they flock towards the hold camp, but perhaps behind closed doors there are fiercer arguments going on. We know at the hawkish end of the spectrum you've got Catherine Mann, who's been really warning about inflation expectations. You've got Swati Dinger at the dovish end, but interesting that she isn't wasn't voting for a cut yet, the market really would have seized on that as a dovish signal.
Lizzie, I want to go to this with Sri in a moment, but let me ask you as well. Is there a sense of stimulus by the United Kingdom government, or are we drifting into an austerity that we knew of a number of years ago?
You might say we're already there. We've got the highest tax burden in the post-war period. The pressures on the Chancellor, Jeremy Hunt, to announce some tax cuts at his budget this month from inside his own party, and it's going to come from the press as well. We've got an election on the horizon. What's interesting about these forecasts from the Bank of England, you mentioned about potentially a recession on the horizon for the UK. What's the Chancellor going to hand out to the economy between now and then? Is he going to give some tax cuts, but at the same time cut public spending? So net, it's pretty much the same.
I was stunned in London there a couple of weeks ago, Lizzie, to see the debate that we saw on the health service as well. Lizzie Burden at Queen Victoria Street here with the Bank of England. A little bit of a strong sterling, 122.12 right now on cable. What a joy to see her in London. Sri Kochagovan joins us right now, senior research economist at Aberdeen. Sri, I'm absolutely fascinated by how the U.S. stands alone, how Jerome Powell yesterday stood alone with massive stimulus leading into massive real GDP. Does the United Kingdom, where Governor Bailey stands now, do they need stimulus to keep it going?
I think stimulus would probably not be a good idea at this point. Really, what we want to tackle is inflation. Now, the Bank of England have a very challenging backdrop. Growth outlook is weakening, but we still have very elevated inflation pressures. Now, inflation is past the peak. It has started to decelerate. However, energy costs are still quite elevated. The headline inflation is still very high. And also we have, even though those commodity price base effects will start to unwind over time, we still have very sticky core services and wage pressures in play. So stimulus right now would not be a good idea for the UK. Now, it's not restrictive fiscal background at the moment, but further stimulus would actually not be helpful for the Bank of England.
Here's a fun fact from the Bloomberg News story that Lucy White wrote for us. Ben Bernanke actually attended the Bank of England's meeting as an observer. It's part of his review into the UK Central Bank's forecasts and communications. And of course, this comes as Bailey has faced some criticism that they didn't move quickly enough to respond to inflation. Sri, can you compare and contrast the efficacy of communication at the BOE versus the Fed?
I think, as we mentioned earlier, there was a conversation about groupthink. There is a split within the Bank of England, and I think the communication has been quite clear from the various members. We've had the arguments for staying on hold, the arguments for perhaps an additional hike, and all of those are quite consistent actually with the data that we're seeing. But it seems that on the whole, we are witnessing a switch towards a focus on growth and the weaker activity data, and some greater faith in terms of inflation actually past the peak and decelerating from here. So we're also seeing, so we have a signal from the split in the vote, and we also have that signal very, very clear in terms of, rates are going to be on hold for a meaningful period of time, even if, as we expect, the economy enters a recession, rates are going to remain quite elevated. And that's quite a burden for small companies in particular, who are much more sensitive to the rate cycle. They are facing a profit squeeze. There is a bit of an issue there in terms of future business investment. And so there are a number of challenges there, particularly for the smaller firms. So that's something that the Bank of England are going to have to really be wary of.
Yeah, credit availability for small firms always an issue, whether it's stateside or across the pond. Sri, when it comes to the stimulus versus austerity debate that Tom was referencing, how does the Bank of England's decision to keep rates on hold for a second straight meeting and warn about a possible recession, warn about the need to perhaps raise rates in the future if inflation reaccelerates, how does that restrain or limit the government's options when it comes to supporting the economy?
I think the government is also very aware, and we have heard from Rishi Sunak, the Prime Minister, we have heard that there is a focus on inflation, even within the government. Yes, they do have an election coming up, but they're worried about stimulus too soon and too much stimulus too soon. So I think they're going to pare back on any measures that are going to fuel inflation further. I think that's also a concern from them. Again, a very challenging decision for them, given that there is an election on the horizon.
Right. Sri, are all the gains in the United Kingdom focused on London? I mean, is it like, you know, the dominance of Paris and France? Are all the economic gains, which, you know, have been tangible here, have they been focused on the south of England?
Well, there has been a big debate for a number of years with regards to the regional disparities. And that was something that for a few years there have been some focus on what are the policies that can help level up the economic outlook. However, it has been quite challenging in order to do that with the pandemic, recovery from the pandemic. And I think the leveling up policies may be, you know, they're on the horizon in the future, but right now, really, the focus is quite narrow. So that regional disparity, unfortunately, is still very much there.
Sri, thank you so much. Sri Kochagovidan with us with Aberdeen this morning. Here in the Bank of England, they lift sterling. That's a short way of looking at it. And Scarlett, it's real simple. They lift sterling because Governor Bailey, even I would say more stridently than what we heard from Jerome Powell, just on first quick glance, says, no, we're here, we're happy we're here, and we're going to stay here.
All right. I just can't wait for him to say Table Mountain again in the news conference.
Isn't that like South Africa? It's like, I think so, isn't it?
Table Mountain?
Yeah. I think that's like Alan Ruskin is from South. He would know. I mean,
we'll ask him.
We'll ask him. 122.16 here on sterling. That is an advance there this morning. And I really want to say here, folks, like if you look at the 30-year bond, John and I were going back and forth 10 days ago or so on the elasticity, the movement of the UK 30-year bond, the gilt, was much more elastic than what we saw in the United States. The United Kingdom yields, let's do the 2-year comparison, 4.75% in the United Kingdom, and it's 20 beeps higher, 4.96% in the United States only. I mean only, and you can only do that on the Bloomberg Professional Service.
I know, that's why
do
we're
an immediate 2-year compare and contrast. She mentioned core services, and that really didn't come up yesterday, I believe, with Chairman Powell. But that's the end of that's the heart of the discussion. Is people are waiting to see in each economy what services do, and Mike McKee's definition of core services.
Yeah, that was great. He stumped Jay Powell with his question. It was very nuanced, and
yeah.
I think at one point I saw Powell's eyes roll to the sky a little bit, thinking aloud. How did I end up here?
Disagree. Yeah, I don't disagree with that as well. Tomorrow, non-farm payrolls. Remember the surprise last month, 336,000. It'll be interesting to see how that's revised. But this week's statistic, the survey, is 180,000.
Yeah,
and any number of guesses. It's a drop off, but that's still a buoyant statistic.
Yes, considering where we are in this economy. Of course, before we get to the non-farm payrolls number, of course, we have jobless claims in about 15, 20 minutes. That's slated to come in unchanged at 210,000. We've also got factory orders for the month of September.
We do.
2.3%. That is an acceleration from the previous month.
You only need one statistic. The Standard & Poor's 500 up 29 points, up 0.7%. We say good morning, Scarlett Fu doing double duty, in for Bramo, in for John Farrow. This has been fun. We haven't been together since Nixon was president, and you know that's good.
The last time we were together on air on surveillance was ZERP.
What is amazing here is, and I've said this for years, Scarlett Fu's celebrity lodestone, and there's another headline: Walt Disney, ESPN bet to debut with planned launch. I have no idea what that means. It's a newly branded online sports book.
It is, with Penn
for
Gaming.
Fans in the United States.
It's a partnership that they made with Penn Gaming, which I think struck a lot of people as curious, because Penn Gaming's brand and Disney's brand, it's kind of a disconnect.
What is Penn Gaming? Help us with this.
I mean, I know it basically as the Barstool guy. was part
it's
of it.
a Barstool.
Yeah, Dave
Okay.
Portnoy. But
Okay,
now he's
got
out
it.
of that whole thing because of this transaction with Disney.
I miss Bramo. I mean, we could never have this conversation. With Fu, we can
You
do
could be
this.
talking about soccer with John Farrow.
I learned more about Hulu today than I've learned in like 15 years as well.
And The Bear. That's what we need to watch.
The Bear is the show I have to watch. Okay. Thank you, Scarlett. It's good to
anytime.
know that. If we keep talking, the market's going to go back to Dow 36,000. We're up 31 points on SPX, up 0.7%. NASDAQ well out over a stick. That's important. NASDAQ 100 up 160. It's a melt up. I mean, that's all there is. Triple leverage cash, I'm enjoying it this morning.
Dow Futures really took a leg up
cash is
and
king.
has continued to build.
Triple leverage cash is king. I'm not buying. Should I buy an odd lot of Apple today, like 2-3 shares?
No, stay with your 5-6% yield in cash.
It's great. Well, yeah, but it's netting out 12.67% this morning. That's good. Apple this afternoon, Greifeld and Fu. Good morning. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
Going meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. We haven't made any decisions about future meetings. We have not made a determination, and we're not, I will say that we're not confident at this time that we've reached such a stance.
The chairman of the Federal Reserve System, Jerome Powell, yesterday, and he's really gotten much smoother at these press conferences. There's a really huge value add and clarity there. I thought, Scarlett, that yesterday he read the least off
Well, he had a teleprompter, apparently.
Oh, he did?
Yes,
I did not
he had
know
a
this.
teleprompter.
He's cheating now. He's like Lagarde.
Well, no. I mean, are we cheating? Are you cheating when you read off the teleprompter?
Every morning. Yes, thank you. But the answer is, so he had a teleprompter instead of looking at a piece of paper.
Yes, I think the last meeting he was using an iPad, and so there are a lot of people commenting on that.
Yes,
and
like
then,
me.
Yeah, this time around he was using the teleprompter, but I don't think there were any notes to help him when Mike McKee asked his questions.
Scarlett, yeah, that's true. Scarlett Fu with us this morning. Bramo and Farrell off today. Well-deserved rest here. Sliced in between a Fed meeting and jobs day tomorrow and Apple this afternoon. I really can't say enough about, not so much buy, hold, sell, but the importance of Apple as a statement on a post-pandemic recovery. And Scarlett, you've mentioned this with Apple. I mean, the massive China mystery that's out there, tangible.
Whether people are buying the Huawei Mate Pro 60 instead of the Apple iPhone, Beijing has already made its preferences clear that the government is not going to welcome use of foreign smartphones, notably Apple, and that's the case for state-owned enterprises as well.
We'll have to see. A diversity of opinions. We're going to touch on this here in about 30 minutes, so stay with us on Apple here in a bit. All I can say is Fu shows up and the market goes up. There's none of the Bramo cam showing us some gloom, up 31 points. Standard & Poor's 500, we're getting near 4,300 there, up 0.7%. NASDAQ up a full stick. That's interesting, getting near 15,000 again. It is some form of melt up through the recent resistance of everybody's different moving averages. 2-year yield well under 5%. Huge rally there of price up, yield down 4.94%. And Scarlett, I go to the inflation adjusted yield. Wow, look at it. I just looked at it, 2.27%. That's come in 13 huge basis points on the 10-year real yield.
Every time you talk about the 10-year yield or the 2-year yield for that matter, it's huge moves. It's gotten so that we're pretty accustomed to looking at double-digit basis point moves and not thinking twice about it.
We'll have to see on the melt-up, but more importantly, the why of the melt-up and the what to do about it, with a brilliant research note from Merrill and Bank of America Private Bank is Chris Heisey. We're thrilled that he could join us today, their Chief Investment Officer. Chris, buried in your note is the heart of the matter. Larry McDonald, among others, say there's a wall of money out there. You call it new money. What is the new money going to do?
The new money is going to go exactly where the data wants it to go, and that is still a big bookend. You talked about before the short end of the curve. I mean, 5.5% at the short end of the curve. 2-year yields over 5% now, back below them, and then a longer duration asset. People are looking for opportunities to come back into equities. They're sliding up a grease pole to a certain extent because we're starting to slow down. We're starting to see the financial conditions bite, and yields are now cresting at the back end. They're coming down at the short end. And everybody wants to know who's going to ring the bell when it says, is it soft landing or is it a recession?
But Chris, you know the equity market gets out front about 6 months. I mean, what's the Bank of America write-up for year-end review to get me out to Q3 of 2024? Is this where you take new money and acquire with courage sectors for next year?
Well, I think next year, we're starting to call it in the Chief Investment Office the foundational year. What does that really mean? For those who've been out of the equity markets, lending themselves into next year and looking at both fixed income and equities, you should have 3 or 4 rebalancing opportunities between this past week and the weakness that we saw over the last 2.5 months, and then all the way into the middle of next year. Why? Because you're going to see some weakness in the earnings revisions because of a slowing economy, but then the bond market should start to normalize in the second half of next year, where you have dare we say, an upward sloping yield curve. And then the real profit cycle, when I say real, the longer term new profit cycle begins to start later in 24, 25, and 26. And as you said, Tom, equities will discount that. So sometime between now and mid next year, you'll have 3 or 4 real deep opportunities to rebalance portfolios to get back up to your equity benchmarks. And since fixed income hasn't performed well at all, fixed income as well.
Chris, I want to ask you about healthcare in particular. We had Novo Nordisk report earnings this morning, and of course, Novo Nordisk, the maker of those weight loss drugs, which Katie Greifeld calls the AI of healthcare because of its ability to disrupt everything, not just the healthcare space, but all the tangential industries as well, the adjacent industries. How are you thinking about healthcare and going in there with these weight loss drugs changing up the scene?
Well, Scarlett, you hit it on the head, disrupting. And there's once every 10 years, there's a giant disruption. It's like an umbrella in the technology stack. It doesn't have to just be in the technology sector, as you've mentioned. The healthcare sector has always been a disruptor, but it's been very narrow. It hasn't been across the board. Industrial's the same thing. Communication services and technology has been largely the disruptor across those sectors. So what we've seen recently is that sectors are a mixed bag everywhere. Energy's got great free cash flow. Healthcare's got some disruption, some yield, but it's also defensive. And when yields go up, it starts to sell off. Utilities, the same thing. So we have to go down, and I think you hit it. We got to go down to the industry group level and then actually at the stock level. Once again, kind of like the 1990s again.
Chris, are you telling me to rebalance Apple? Are you telling me to rebalance Microsoft?
I think in the technology sector itself, the ones that have been working, it's because they have big moats, they have cash, they're earning 5% on their cash. In some cases, they're earning more on their cash than a lot of companies in the S&P have in total earnings. So those are moats, those are viewed as high quality. Well, wouldn't get overly exposed to that. But in terms of being at least benchmark weight to the tech sector, I think that makes sense.
Chris, thank you so much for the brief. Chris Heisey with us with Merrill and Bank of America Private Bank here. Again, futures up 31. It has been just a persistent vault of people getting into the market here in front of an opening an hour and 7 minutes away. The VIX, wow, we're going to get a 15 before the end of the show, 16.31. We may get a 15 before the close this afternoon with Fu and Greifeld. While we were talking to Chris about American equities, this is off your radar. The pros, they've got dollar yen and they've got euro dollar. Take out the dollar and you've got this strange thing, which is 1 yen as compared to euro. This is euro yen.
Look at that.
Moments ago, printing a 160. And out of the pandemic, this is a strategy of reflation in Japan. 10 years from now, every economist, every graduate student will be thinking about this as they write a PhD thesis. This is extraordinary. It's broken. And what do you do with euro yen 160?
What do you think Japan is more concerned about, euro yen or dollar yen? I mean, 150 is kind of the line that Japan watches for in dollar yen.
They're concerned about flows.
Is there a level?
I think they're concerned about flows, and it can be not only the flows of currency and a hugely active Japanese people in moving money in and out of the country. So there's the flows, much more than interest rate dynamics, which is where it comes from. I get that. High interest rates here, low interest rates there. But it's the flows, but it's also, as was mentioned yesterday by Enda Curran, I think this is really important, it's also trade flows, in that we get it. Weak yen, they sell more Toyotas. That's what we were trained. But just as importantly, weak yen, they've got to import tons, like, I'm not kidding, tons of stuff into Japan.
Starting with food.
Ever more expensive as well. So that's an important note. One more reason to pay attention to Yvonne Mann and what we're doing in Hong Kong with Bloomberg's effort in Japan and across all of Asia. Futures, what can I say? They advance up 31. Jonathan Pingle, UBS here, before an American jobs report. It's Bloomberg Surveillance.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Bloomberg Surveillance, Jonathan Farrow, Lisa Bramowitz, off. Thrilled that Scarlett Fuka darkened the door. We're a lot of fun with
right
photos.
In the door. Right in the door.
Right in the door. Darken the door, whatever. But, you know, we're having photos and we're looking back down memory lane and all that. And what we know and what has been constant from when Scarlett and I were together years ago, the dirty little secret is Michael McKee's the one who really runs the ship.
We rely on him.
You know, you forget about fancy people in bow ties and food doing or celebrity stuff in the Rangers. McKee drives a ship, and let me tell you, from his question yesterday at the Fed, where once again Chairman Powell said, can he just observe? Bernanke was observing at Bank of England today. Bernanke was observing. Maybe McKee can observe at the next press conference because he changed the dialogue yesterday. Joining us now with data here, claims, and a few other things like productivity, Michael McKee.
Yes, let's do claims first because not a lot of change here. It was 212,000 last week. This week, 217, so a slight increase, but nothing that's going to tell Jay Powell that the labor market has gotten particularly looser. The productivity numbers are really interesting.
Yes.
Non-farm productivity in the third quarter up 4.7%. That follows a 3.5% rise. Now, this is with all the strong hiring that we've been doing, so it does suggest that the economy is able to withstand high interest rates and the inflation rate where it is. And this is the kind of thing we haven't seen basically since the 1990s. Now, that raises the whole question of where you go from here. But unit labor costs only up 0.8 of a, actually, I'm not seeing the minus sign. Unit labor costs fell 0.8% after rising 3.2% in the prior quarter. So businesses' margins should be okay. They can afford to pay us, and we're doing more work in return. So this is the good news.
I got to jump in here, folks, because this is so important. McKee nailed this yesterday with the chairman. Futures advance up 34 right now. NASDAQ up 1.2%. Yields come in sprightly here. 10-year yield in 6 basis points, 4.68%. You know, victory lap here for Bloomberg Surveillance, Mike McKee. I brought this up with Dr. Dudley yesterday, and I'm sorry, Julia Coronado's onto something here, Mike, which is possibly we have a gross misperception of advancing productivity or efficiency in America. How does this change the dialogue, Mike, in your world if we see good and better productivity?
Well, it obviously sets us up for a different kind of monetary policy going forward, and for the fact that we can afford to have the kind of wage gains that we have been seeing. And it's less of an inflation danger than the Fed would think. Now, this is 2 quarters where we've seen some really strong growth. Normally what happens when you see a productivity jump is you're coming out of recession and there are fewer workers, but they have to do more work. In this case, we're long out of the recession, and we've been hiring like crazy, so there's lots of workers out there, and they're just able to produce more. Is this the beginning of the AI trend as well? Like the 1990s was computers? So a lot of questions out there about how long this can last and then what it would mean going forward.
So how does this set us up for the jobs report on Friday, Mike, where the non-farm payrolls, according to economists, surveyed by Bloomberg, expect 180,000 jobs added after 336 jobs added the previous month?
Yeah, well, we were all stunned by last month's numbers. I don't know that we'll get the same kind of surprise this time, but you can't rule it out. But 180,000 is still quite strong. The Fed thinks you need about 100,000 to absorb new entrants to the labor force, and they would be looking for a number around that level to suggest that the labor market is no longer tight. But right now, with jolts where they are and with the numbers that we have seen in many other indicators, including jobless claims today, you have to think that hiring remains strong. And Jay Powell was asked about this yesterday. The labor market is not reacting the way they expected it to. Nothing really is these days, but they can't really take the same kind of clues from it that they thought they could when they were originally raising rates and trying to figure out where they needed to go.
How do you read the unit labor costs? Because I was surprised, too, by that negative sign in front of the 0.8%. This is an unexpected decline in the third quarter, and these are preliminary numbers of unit labor costs, down 0.8%. The consensus estimate was for a gain of 0.3%. What does that mean when it comes to the real economy?
Well, if it is really that unit labor costs are falling, it's kind of hard to believe in the sense that we're seeing nothing but rising wage levels. But the unit labor costs can be a little bit volatile because a lot goes into it besides just wages.
Gotcha.
The other costs of running a business. But if they do, if they are lower, then obviously companies' margins can be higher and they can afford to raise wages, which is, of course, all very interesting in the context of the UAW settlements.
Michael McKee, thank you so much. Really look forward. Yeoman's duty here for Mike McKee over the last 3 days, finishing strong tomorrow on the jobs report. We're going to rip up the script right now. Futures up 33, down futures up 181. The VIX comes in ever stronger, 16.27. I'm going to categorize it as maybe a Thursday melt up. We can rip up the script with a gentleman that worked in the macroeconomic section at the Fed. Jonathan Pingle joins, of course, with UBS, their chief U.S. economist. John, I'm sorry, I got to go here. And Julia Coronado, ex-BNP Paribas macro trends, is way out in front in this. Are we completely misguessing the efficiency, the productivity, the technological advancement of America? Are we just flat out too pessimistic?
Well, I mean, it's hard to know what the expectations are, right? There aren't that many people as in the weeds on productivity, on the immigration rebound as Julia. And, I'll give Julia a lot of props since we were at the board together a long time ago. But I would say two things, and Chair Powell touched on this yesterday. One is, we have been seeing a pretty impressive rebound in labor supply, and that's been both a combination of a significant improvement in net international migration coming out of the pandemic, in addition to some groups like prime age women punching out new all-time highs in their labor force participation rates. And, we've certainly been writing about that, and Julia's done a good job as well. On the productivity stuff, though, we do have to remember that productivity was incredibly weak as we went through the pandemic and immediately coming out. So we did have a fair amount of catch-up to do. And when we look at sort of the longer-run trends, after today's data, just mathematically, you are going to be a little bit above the longer run trend, so it is good news. But you're actually really still not that far from what we were seeing pre-COVID. But I will say, together, I think it's right. We're seeing nominal wage gains slow, and some of that is these supply side improvements and unit labor costs dropping. We were forecasting a 7/10 drop. That is the result of the slowness we saw in average hourly earnings combined with basically 5% GDP growth in the third quarter. So that's a good supply side story.
Tell me about core services. The chairman didn't talk about it much yesterday, but are we seeing a service sector disinflation to give confidence to an outright goods deflation?
We are. I mean, we've had some positive news on the core services over the last several months. But I would say, great job with his trying to pin the chair down on the objective versus subjective decision. But what we want to see is a little bit more slowing in the labor market in order to see more slowing in those components of inflation. Because if we look at the ECI, it does look like wage gains are still a little too brisk to be consistent with sustainable 2% inflation. So I do think the chair, and Mike was just saying this, they do need to get the labor market to slow here if they are going to achieve their mandate and restore price stability.
All right, this is clearly a big week for labor market data. You had ADP employment change, JOLTS, and of course, jobless claims this morning, unit labor costs, as well as productivity. We know that the UAW has come to agreements with the automakers, but if you are a union organizer, and I'm thinking of the Actors Guild, for instance, that is still on strike, what is your takeaway from the flood of data that we've gotten on the labor market right now?
Well, labor market's still tight, right? So, even, I mean, and I don't really think you need to look much beyond the unemployment rate at 3.8% to say, the nation's at full employment and markets are tight. And, you've got a point here where there might be some bargaining power for workers. The other interesting thing about a number of these strikes is there are a lot of non-wage issues at stake. You're talking about, the use of AI for the actors. You're talking about, the shift to electric vehicles amongst the UAW. And that's actually been sort of an interesting aspect where, a lot of these labor negotiations, it's not just about the wages, it's really also about sort of these changing industry dynamics that they want to protect their workers from.
So how does that show up in the data? How does that show up in the economy, in what's measurable?
Well, we should definitely see the impact of the UAW strike tomorrow in tomorrow's data. The BLS released their strike report. Between the strikes, the big three, and Mack Trucks, that should be about a 30,000 job reduction in motor vehicle and parts assemblies employment. You'll see it in table B and B1 of the employment situation release. So we should definitely see that weigh on the employment report tomorrow. But that'll rebound in the subsequent report. And I think the bigger picture is that you have put in place for some of these contracts, a return to things like, cost of living adjustments, et cetera. So this should generally mean for these workers somewhat firmer wage gains over the next few years than would have otherwise been the case.
Jonathan Pingle, thank you for the brief, particularly there quickly on advancing productivity. He is with UBS, I love saying this, the Union Bank of Switzerland. Left standing of the three major Swiss banks.
Well, and now it's absorbed Credit Suisse as well, but that's not part of the name anymore.
And I am absolutely fascinated by productivity. First rule, folks, there's three ratios. There's a lot of moving parts. There's the numerator, the denominator, and as a core basis, there's six things moving at the same time. And that's where you hear Dr. Pingle simply saying, we don't know. And the answer is you don't know productivity. What's an Apple i15 going to do? Guess what? You don't know for 10 years. You don't know for 15 years. And yet we're all babbling, this. But I'm sorry, the market's talking right now. The market's saying something here from 2 p.m. yesterday.
The market's interpreting it the way it wants to, but you're right. These are numbers, these are realities that we won't really confront for years to come.
30-year bond, 17 basis points from 5%, 4.83%.
The 20-year bond is already above 5%.
Excuse me.
It's been that way for a while.
A brief foo on the break, folks. We don't quote the 20-year bond. Even Bramo doesn't quote the 20-year bond. We've got an advancing stand. I'm going to cut you off. I'm done. I got the 20-year bond.
It gets my attention.
It's an afternoon thing. Standard & Poor's 500 up 38 points. The S&P is up 0.9 of a bull market percent. We say good morning, and of course, Fu save it because I really don't pay attention to earnings.
To sell short Bitcoin. Okay, let's place order. I'm looking to sell Bitcoin at 35,545. Let's place this order and wait until we will get filled. Yeah, okay, 35,545. Okay, if you're looking to sell short Bitcoin, copy this trade with a place and stay with me, follow my trade, and we will execute. We will fill this trade together, and then I will let you know when we're going to sell position. Okay, guys? I'll speak to you later.
We're going to bring it in right now. This is the Anne-Marie Hordern barista card.
Is this for real?
Yeah, this is with Union Labor. It's amazing. And this is like for real, folks. Do we have this in New York? I don't know.
Everything's self-serve, and it definitely doesn't look like this.
She had a tantrum one day and said, I can't get a decent cup of coffee. And anything Anne-Marie does, they react immediately.
Oh, absolutely.
They don't give me
She calls the shots all day long.
But there it is. I mean, I think it's a New York idea. For those of you on radio, they got this high-tech, it's got syrups. Do you do the syrup thing?
I don't do coffee.
Yeah.
But, you know, I'm not one of the people who are helping Starbucks move up 10% in pre-market trade either.
Scarlett mentions Apple. This is must listen and watch on Apple. Pierre Ferragu will join us from State Street with Ferragu Caution this afternoon.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
The power that Apple has to convince people that now that they own everything from the silicon to the hardware to the software is really reassuring customers that basically they're buying something that is in full control of Apple and not like before at the mercy of Intel silicon.
Carolina Milanesi, Principal Analyst, Creative Strategies there on Apple. Program note, Fu Greifeld this afternoon. They're going to tear apart what is a wonderfully clean press release from Apple. It's actually in English, and they'll be looking at this and looking at that. Could you just tell us early on what the cash build is at Apple?
It's going to be massive.
Because it's like an island nation.
Is. Yeah.
You know, it's like when does the dividend go up? Are you going to reinstitute the share buyback?
Yeah. I mean, they kind of have to with the amount of cash, or they buy something, but that's not Apple's style.
Yeah, well, Apple having a challenging 90 days here as well. Even with that said, and this is a really important interview, and particularly for your Apple bulls. We can have Apple bulls come out, I think, eyes at Wedbush. And you know the plot. The most articulate caution on Apple is, and he will always be for me, the gentleman from Bernstein. Pierre Ferragu wrote the black books for Bernstein on technology for years. Yes, he's got a fancy title, Global Technology Infrastructure at New Street, but the answer is once and forever, he will always own the black books over at Alliance Bernstein. Pierre, thank you so much for joining us. And you have been cautious on Apple. Is now a time to buy the shares after the lassitude that we've seen over the last 12 months?
I would have liked to say yes, Tom, but unfortunately, and the reason why I would have liked to say yes is because sentiment is very, very low on the name. 60% buy ratings and 40% sell and neutral rating for that name. It's very, very, it's as low as can be, I would say. So we've had like a very slow year, 3 quarters in a row in negative growth. We're getting back to positive growth probably on the guide, but it's just because we're hitting like the easier compare now. And so that slowdown, like the stock reacted relatively well to that slowdown. If you look at Apple stock, it roughly tracked the Nasdaq. So not much happened on the stock. And the reason why I wouldn't jump on board now is first not a significant pullback. So valuation, you're still paying like a hefty premium for Apple. It's partly justified, of course, for the quality of the franchise. But what happens next that really creates a surprise and gets the stock to work from here? It's kind of an empty list.
The heart of the matter, Pierre, is single-digit revenue growth. So I went back to the pandemic, and basically sales are up 47% from 2019. Yes. But the free cash flow generation off that is up 71%. In your caution, are you suggesting that formula they have of operating leverage, of generating EBITDA, of generating free cash flow is now broken given single-digit revenue growth?
No, I think it still works, but of 5% revenue growth, you don't generate as much free cash flow growth. So the way I like to think about it is out of like between 3 and 5% revenue growth, Apple can generate above 5%, like 6-7% earnings, dividend, free cash flow growth on a sustainable basis through like systematic buyback, through operating leverage, etc. So there is definitely a huge amount of quality there and a very strong balance sheet, as you just mentioned. So all that is worth a premium. When you look at Apple today, it's trading on 27 times, forward earnings. Standard & Poor's names who grow between 5 and 10% per annum, their overall economics are trading on like 22 times. So you have a significant premium. So you won't have like a valuation surprise out of this very healthy, very high quality model. And so when you own the stock today, you have to believe this premium is going to remain, which I think is fine. Mm-hmm. But you can't expect like a sudden jump and a sudden increase in valuation multiple unless you have a new growth story. And that's where it's kind of difficult to expect that to come through.
The China part of the equation is not a growth story for Apple right now. Huawei's Mate 60 Pro getting a lot of attention, kind of stealing the thunder in many ways. And Apple bears will always point to the China demand for iPhone 15 as a reason to not be optimistic. How does Tim Cook frame the negative headlines that are hitting Apple out of China, whether it's the Mate 60 Pro or whether it's Beijing's ban of using foreign phones for government workers or at state-owned enterprises?
Yeah, so I think it's a very good question. It's a source of concern. Interestingly, I don't think it's going to materialize that quickly because like the new Huawei phone is really like in early innings. They probably don't have a strong case to be that competitive against the iPhone. But it's true that in this jump you mentioned since 2020, Tom, a lot of that was like Huawei getting out of the picture in China, and Apple really like gaining about 20 million extra units, iPhone units, combined with an increase in ASP. And so that part of the business, I think, is kind of at risk over the next couple of years because China might be able to pull together an alternative to the iPhone. The iPhone remains like an exceptional product. This is the only phone at a 3-nanometer manufacturing node for the main chip, exceptional quality, exceptional like integrated software and hardware, etc. So I wouldn't say the Chinese are going to put out a phone that can compete with the iPhone, but we know that in the past, about 20 million phones were selling at Huawei, and when Huawei disappeared, that market seemed to have moved straight into Apple's hands.
I see.
And that's a concern, of course.
So how about Apple and AI? I mean, Apple was kind of left behind when ChatGPT and all the other AI tools, took over the zeitgeist. I know Apple's working on things with relative to Siri and how it can incorporate more generative AI into its products. Is this something that has reached a point where investors can model it?
No. So I think on the business model of Apple, who is making all its profits from selling hardware and then selling mostly subscription services over this hardware, the kind of magical one trick where you can charge $30 a month for a generative AI-based service, that doesn't really exist. The way I see it is that for Apple, generative AI is going to be more of a defensive move. Siri has never been exceptionally impressive in terms of what it can achieve in terms of voice recognition and user service. Apple is going to continue to do their best to enhance the overall user experience with generative AI. But I don't see that as a revenue enhancement for them, as it could be for a Microsoft or Google and Meta on advertising and things like that.
Pierre, just to finish here, is Apple such a dynamo, like you were mugged by your kids to go in and buy more toys, like Brammo, like Fu, like Keen? I mean, we're all in the same game. Are you suggesting that this is a stock that treads water for 5 years, or are you actually looking for a diminished share price?
So that's, I think, from here over the next 5 years, I think that's a stock that can compound with its earnings power or its dividend power. So, it can compound in single digits, maybe high single digits. So it's not too bad for a very high quality name. And then I would look at buying it only if there is a bit of a dislocation at some point, like a loss in confidence, if this quality perceived that Apple wasn't there all the time. And so if you see a weakness coming out of China or things like that, and if the stock is hurt by that, I think I would be very keen to revisit and look at getting into the name at a more attractive valuation, because when you're talking compounding, then valuation is almost everything, because that's what drives your ability to buy back your stock more efficiently and things like that. So I really think you need a lower multiple to make Apple a compelling single-digit compounding opportunity. And then a kind of a breakthrough opportunity, an opportunity to increase prices, to increase significantly volume, to launch a new product. Difficult to see that on the horizon, to be honest.
Pierre, thank you for the brief. Pierre Ferragu, for some real Apple caution there, different than the fanboys that so many people speak of. As Pierre talks here, we got so much to talk about. I got 25 seconds. Scarlett Fu, thank you.
Oh, it's
Did
been
you
a
survive
pleasure.
this?
Yes, I survived, and I'm staring at the 10-year yield just plummeting right now.
There's plummeting is the right word here. Neil Dutta out. He says this is productivity. He says Neil Dutta says it's just simply welcome news. Futures up 1%, up 41 points. For John Farrow, the Dow up 234 points. This is Bloomberg.
They're missing
Good morning.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Keeping the faith in billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway, to outperform the S&P 500 over the next 5 years, adding to an incredible run in which Berkshire shares have returned more than 3 million% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad BNSF and car insurer Geico to See's Candies and Coca-Cola. About 1/5 quantify the Buffett premium at more than 10% of Berkshire's stock price. More than a quarter say it's somewhere between 5 to 10%. There is one problem for Berkshire Hathaway, its size. Thanks to a bunch of cash-generating insurance companies, Berkshire has at least $130 billion in cash that it can put to work. But it needs big acquisitions to move the needle. Buffett calls it hunting for elephants. And we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
This is Bloomberg.
From New York City for our viewers worldwide, I'm Matt Miller in for Jonathan Farrow. We see markets futures up after the Fed signaled it's done with rate hikes. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, Chair Jay Powell signaling the Fed could be done with rate hikes, boosting futures after stocks record their biggest three-day rally since March. As investors look ahead to Apple after the earnings, after the bell, we're going to get earnings. And we begin, though, with the big issue, countdown to the payrolls report.
The real test will be on Friday when we get the employment report, the jobs report.
The jobs number, is going to be incredibly important.
It's always important.
The labor market remains actually fairly hot.
Just, very strong.
Still extremely tight.
Last month it was 336,000 jobs. We're expecting around 200,000 jobs.
The expectations are it's going to go the other way.
We are gradually seeing a slowdown in the pace of hiring. The job gains have indeed slowed. We'll see if that slowdown continues. Continued moderation in the labor backdrop, even if it's uneven, I think is going to persist.
Labor market is the key right now, key indicator.
Key thing that investors across asset classes are going to be watching. Everybody's trying to figure out what the underlying trend in the labor market is.
It all comes back to jobs.
We'll see what non-farm payrolls gives us on Friday.
Joining us now to discuss is Lafayette's Krishna Mamani and Seema Shah of Principal Asset Management. Seema, let me start with you. What do you think payrolls is going to give us in addition to all of the news, the refunding, the Fed decision that we've already had?
Hi, Matt. Well, I think the key thing for payrolls is really about how much support there is for the consumer. So we've already seen that the consumer is really strong. We know that that has been the focal point. And one of the things that is underpinning forecasts for a downturn next year is this assumption that consumer spending starts to weaken. That doesn't happen if the job market remains as strong as we've seen. So I think it's going to be key to watch, obviously tomorrow, but obviously, how is the job market evolving over the coming months? And are you starting to see some of that job pain that would maybe take out some of the foundations for the consumer?
Krishna, do you agree? Our own Anna Wong here, the chief economist at Bloomberg Economics, has put out a report today showing that, non-farm payrolls, whatever the number is, it's not indicative of a recession coming. It's not a very good indicator.
Well, so I won't debate whether it is a good indicator or not, but I think given what is going on in the rest of the economy, I think expecting payrolls to correct in a big way or for us to even get anywhere close to a recession at this point, I think the likelihood of that is basically zero. We had a 5% quarter. And when you have a 5% quarter, things may slow down, but the momentum is enough for you to carry through at least for another quarter or two. So I think expecting
another quarter or two at what?
A recession
at what?
in the
At like
US
0.2, at 0.5, or do we get a quarter or two at 2.5?
Well, that's a good question. I think the expectation is that it'll be low, and I would say that is probably misplaced at this moment. I think we don't get a 5% quarter, but I think it's quite likely that we end up being 2.5 range rather than 1 or lower than 1 at this point.
Seema, you know, we're showing in a box the 10-year yield as we talk about this, and it's pretty amazing to see it now at less than 463. I mean, it really has plummeted since we got the refunding, since we got a dovish Powell. What do you expect for the economy, given that the Fed has kind of already given us its view that it's still strong enough and inflation is coming down fast enough that we don't really need any more rate hikes?
Yeah, you know, this plunge that you're seeing in the 10-year is really interesting, because I imagine what Powell would say today if we were doing the press conference now and looking at the drop in bond yields. I wonder if you'd have a very different narrative to the meeting. So, yeah, look, I agree. There is a very, very strong economy. Given the growth rate that you saw in Q3, Q4 is likely to be a strong quarter. Not 5%, but certainly the 2 to 3% range seems quite likely. But from there on, and assuming there is a big assumption here that the consumer does start to weaken, along with a number of headwinds that have been repeatedly listed, at some point in early next year, we would expect there to be a downturn. Now, recession, not recession, I think these are almost kind of irrelevant almost discussions, because what we're expecting to see is a downturn where maybe you see a couple of quarters of negative growth, but the rise in the unemployment rate that you could see will be nothing like or nothing comparable to previous recessions. So a downturn, but this is certainly not a deep downturn that we're expecting.
All right, I think Bloomberg Economics is also still forecasting a downturn sometime around the turn of the year. Let's get over to Mike McKee right now, because the focus is shifting from the Fed to the data, less than 24 hours until the U.S. jobs report. But as Seema Shah points out, Michael McKee, you know, it's interesting that yesterday Powell was saying these rates are doing our work for us, essentially. We've heard a slew of Fed speakers say that. And now these rates are getting much lower.
Yeah, Matt, but let's talk tomorrow at 8:31. I mean, if we get a surprise like we did last month, 363,000 jobs, I bet you those rates go back up again. Everybody is trying to decipher what the Fed is going to do, and obviously Jay Powell had trouble answering my question on that yesterday. But the important thing that he said is this: evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. So we don't have to grow a lot more than 2%, but if we grow a little bit more than 2%, and if the labor market doesn't ease up, then it keeps a rate rise on the table. And here's the latest data. Obviously, 4.9%, we're well over potential growth. Payrolls expected at 180, but that's still quite a strong number. And unemployment doesn't go up. The Fed was thinking we'd be at 4.1% by the end of the year. Let's see what happens on Friday. JOLTS came in even higher and suggests the labor market is not tight. Jobless claims are not giving us any of those indications either. And the good news we got today is maybe some of this is all sustainable, because productivity went up more than forecast. And the only time, I mean, you look at this here and you can see productivity spikes after recessions, when companies have let people go and those workers who have to now deal with a recovery have to do more work, except for in the 1990s, when we saw the Alan Greenspan productivity boom from personal computers. Now we're seeing strong growth in productivity again. Does that continue? Because it's coming as the labor market is not tight, is tight, and we've done a lot of hiring, not after a recession when a lot of people have been let go. Does it continue? That'll be the question. But it does suggest that if it does, there is an opportunity here for us to perhaps maintain a little bit stronger economy without the Fed having to react.
All right, Michael McKee there, our international economics and policy correspondent down in Washington, D.C. Krishna Mamani and Seema Shah still with us. And Krishna, I want to just quickly get your take on the 10-year yield. As we watch this drop, I think it's one of the most interesting market moves I've seen in at least a few weeks. I mean, the other more interesting market move was the 10-year on the way up through 5. Right now we're at 4.6. What do you think about that?
Well, so I think Mike McKee is absolutely right. That is, let's not derive too many conclusions out of one day's moves. Yesterday, everything came together, and the market reaction probably is related to everything coming together. And things could change dramatically tomorrow. I think from a rates perspective, we are in a purgatory. It's a good purgatory, but a purgatory nevertheless, in that we are going to have gappy moves both on the upside and the downside without really having any significant direction. I think if the 10-year gets to, let's say, 4.5, the upside from there on is very, very limited in my view. So I think we may like it today, and we liked it yesterday for sure, but counting on it to persist, I don't think that is in the cards given the underlying momentum in the economy in the current quarter.
Well, and to be fair, you've been saying this for a while, Krishna, that you think, we're at these levels and we don't know the direction, even though we're going to see these annoying or frustrating gaps up or down and try and make sense of them. Seema, what do you think about the volatility that we've seen in the bond market, and how closely is it tied to, the debt and deficits we've been talking about so much more lately? All of a sudden, it seems like the market cares, kind of. Do we really?
Well, so we do. I think if you're a long-term investor, you have to be looking at a range of issues, and we certainly know that the move in bond yields is not just down to one single factor. It's not just down to rate expectations. It's not just down to the Bank of Japan or issuance. There's a number of different factors which are at play here. And certainly, to Krishna's point, it does make it difficult to see 10 years sustainably lower, or down certainly near the low 4s. Anytime soon. So I do think that we're in a higher range. That volatility does mean that, of course, it's very easy to be swept around by the various moves. I think as an investor, you take a longer term perspective. You look at over the 6 months, 1 year horizon, and what you're likely to say, from my perspective, is you're going to see a bit of a slowdown. So you could see some downward pressure in bond yields, but you're not going to go back down to those 4% levels soon.
Krishna, what do you think about the stocks? We've seen the correction at the end of last week, and now 3, maybe 4 days of rallies. Are we off to the races, or is this also another one of those gaps that just frustrates you?
Yeah, so I think if you look at valuations and you look at rates and you look at the underlying growth momentum in the economy, I think the likelihood that stocks correct in a big way, I don't think is in the cards. In the same vein, given where valuations are and what earnings growth is going to be, expecting a big up move in stocks is probably not in the cards. As I said, we will have moves up and down, and we'll lose our collective mind trying to figure out a direction when there's really none forthcoming.
I wish we had one collective mind. I would be a lot smarter if we did. Seema, what's your take on, earnings have been much better than we thought they were going to be at the beginning of this quarter, right? Just like GDP, I guess. If we see a slowdown, how hard does that hit companies?
Exactly. The earnings season has been very much like the economy. You've got a very strong hard data, strong earnings, but it's really about the guidance. It's about what the concerns are, is what comes down the line. We do believe that earnings growth forecasts are too high. There's too little emphasis being put on margin compression for next year. So if you continue to see inflation staying lower and falling even further, then margins will be under some pressure. So I think that there is space for negative surprises in the earnings picture for next year. In terms of what that means for equities, though, I agree with Krishna. You're unlikely to see a very, very big downward move, because what we're anticipating is, even though it's a downward surprise for earnings, it's not going to be a big drop. It's not going to be a big crash. So I think as an investor, again, take a long-term view. This is a fairly range-bound market. It's a volatile one, but it's quite range-bound, and you need to be looking for the various value opportunities and certainly focusing on strong balance sheets for the time being.
Krishna, I want to ask you about the inflation picture. It's obviously had a huge impact on margins up and down. And now I know the Fed uses the core PCE or the super core, right? But if you, like, I look at CPR from Infrastructure Capital Advisors, they just take core CPI and they take out the kind of misleading rent equivalent, right? And they replace it with the Case-Shiller index. That shows we're well under 2%. If you look at Cam Harvey yesterday from Duke was saying also that if you take out this misleading, you know, housing data that they put in there, we're well under the 2% target. So how do you see inflation?
Well, I think what I think doesn't really matter. What matters is what Powell and the FOMC thinks. And I think they told us that yesterday very, very clearly. That is, they're pleased with the direction of inflation, but it is not coming down fast enough. And I think there's some risk that it probably goes on the other side or goes the negative way, increasing slightly in the before the end of the year. So I think inflation is, again, it's coming down slowly, and I think expecting a very dramatically different direction in inflation, I think is not warranted. What that means is no Fed cuts for the any decent investment horizon that you can think of at the moment.
Very, very good and important reminder. What we think isn't quite as important as what Jay Powell thinks, and he's looking at the data that he's looking at. Krishna Mamani and Seema Shah, thanks very much. Joining us now with a look at the stocks moving ahead of the opening bell. Let's bring in Abigail Doolittle.
Well, we do, of course, Matt, have the S&P 500 mini futures surging, in fact, up for a fourth day in a row, heading to the best week since November of 2022. Helping out today, take a look at Palantir, surging 17%. They put up a record profit. It was 7 cents, but nonetheless a record profit. And it's a fourth consecutive quarter of a profit and beating. Starbucks up 11%, a 10% adjusted earnings beat. They beat sales as well. The outlook was cut, but the same-store sales being up 8% versus the 6.3% estimate. Investors liking it. And then finally, Qualcomm, solid quarter, better forecast. Well, that means, Matt, that investors think that perhaps some of the mobile phone the glut in inventory, well, it may be easing.
All right, Abigail, thanks very much. Abigail Doolittle there looking at some of the stocks just about 15 minutes away from the start of trading, and futures are higher. Plus, we have a very important interview. The CEO of Novo Nordisk, Lars Fruergaard Jørgensen, joins us. The company posting blowout results as the obesity drug frenzy, GLP-1. Is it a fad or is it the way forward? That conversation next. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is the Countdown to the Open. I'm Matt Miller, in for Jonathan Farrow. A Danish pharmaceutical company is enjoying monster success with two of its new products. Novo Nordisk raising its outlook for the third time this year thanks to Ozempic and Wegovy. You may have heard of them. The company's new diabetes and obesity drugs, shares nearly doubling over the past 2 years, making it Europe's most valuable company. Bloomberg's Katie Greifeld is standing by with the CEO. Katie?
Joining us now is Lars Fruergaard Jorgensen. I'm thrilled to say, Lars, it's great to have you here. And I don't really need to say that obviously demand for Wegovy is just skyrocketing right now. So let's talk a little bit about supply, where clearly we've seen issues specifically in the U.S. where you've limited starter doses. When should we start to see some of those supply constraints start to ease?
Yeah, thanks for having me today. You're right, this is a really exciting moment where we see tremendous demand for our medicines. We have a keen focus on making sure that patients get a good experience. So we want to make sure that those who start treatment can also continue treatment. And that's why we have taken the starter doses down, to make sure that when you titrate up, you can have a good experience on the maintenance dose. We keep increasing our capacity, as just explained by the recent upgrade. As we look to the future, we'll be gradually expanding and bringing more and more product to the US so we can continue this innovation-based growth strategy. Specifically, how and when, I cannot go into much details about, but you can trust there'll be more and more supplies coming to the market.
Well, Lars, you said previously that in terms of the starter doses, we should expect to see those limits stretch into 2024. Is that still the timeline?
Well, we see it's a dynamic situation. It's obviously also a function of demand, how we have to handle these starter doses, and a function of how we supply. So we'll not go into specific guidance about it, but for the remainder of the year, you will see the starter doses being lowered somewhat. And then we'll decide in a dynamic fashion when we have supplies and we see what the demand is, when we can gradually bring more starter doses in. But there are more and more products coming all the time.
Lars, I struggle with, well, an addiction, I would say, to ice cream and extremely weak willpower. So I'd love to get on one of these, but I'm worried about the stomach problems I hear about. There are reports of suicidal thoughts, and I'm terrified of needles. Is there any way you can address those issues in a new product?
Well, we have studied this product comprehensively. We have also done just recently this huge outcomes trial called SELECT. So when you look at the totality of the evidence of the product, we feel that it's a well-established safety profile, as stated in the label. So we don't see any signs of suicidal increase or anything like that. The needle part I cannot take away from you. We are also studying the product in an oral administration, so it can come potentially as a tablet. But for now, you will have to take it as a weekly injection.
Well, when can I get it as a pill? And is it going to be as good as or better than the pill products coming from Pfizer or Amgen?
Well, I cannot talk to competitive products because I have limited insights to that. But I can tell you that we have studied a higher dose in obesity of semaglutide as an oral administration, which shows to be comparable to what injectable therapy can give. Having said that, I would also say that we hear that many patients actually like the weekly injection. So the efficacy you typically get from an injectable product, which is higher, and the convenient weekly injection is actually, for many, a very attractive dosing regime. But I, of course, also accept that some are afraid of the needle. But you should have a close look, because it's actually a very small needle, and most would not be able to really feel when you take the injection.
Well, in addition to when Matt can actually get this in pill form, there's a lot of questions around when insurance will cover some of these products. What are your expectations around the timeline for Medicare inclusion for Wegovy?
Yeah, this is something that's being debated a lot in the U.S. Right now, in Medicare Part D, it's not allowed to provide for anti-obesity medicines. So it takes a law change to open up for that. I believe that's being closely debated in Washington, and it could happen sometime in the future. I don't really know when. In the meantime, we see that we are gradually expanding the access in the commercial space. We have now access to some 50 million Americans having commercial insurance and also some government coverage. So we see a gradually opening up, and we see a broad access that we can address. And most of those patients are, facing a very low copay for getting our medicine.
In addition to obesity and diabetes, of course, Novo is studying GLP-1s in everything from Alzheimer's to osteoarthritis. When you think about these other indications that you're looking at, which of them seem most promising?
Well, I think we have also just seen that there was a so-called flow study studying use of semaglutide for patients living with diabetes and kidney disease, and that was actually stopped at an interim data point because it showed to be highly efficacious. We haven't seen the data yet, but it was stopped early because of its profile. So it's really exciting to reflect on a number of diseases in this cardiometabolic space, and add to that Alzheimer's, where it really shows that semaglutide and its unique profile, being an anti-inflammatory agent, can lend itself for a number of diseases. We still need to see the readout. We have seen the readout in cardiovascular disease and the reduction in 20% risk of cardiovascular disease. We'll discuss the data in the upcoming conference here in a few days, American Heart Association. So I think that's the first exciting point. That's in cardiovascular disease.
Well, I don't need to tell you, Lars, that in addition to other drug makers, you have everyone from snack makers to retailers, et cetera, airlines warning about the so-called Ozempic effect. What are your thoughts on that? Do these drugs actually have that far-reaching of an effect in your view, or are some of these concerns a little bit overblown at this point?
I think it is established that obesity is a leading cause of a number of comorbidities, not follow-on diseases, but obviously also snacking and the like. I think some of the speculations around how it impacts the food industry and the drinks industry is perhaps a bit exaggerated. But I think it underlines that for the first time we really have an efficacious way to address weight, something that is a concern of a large part of the Western society today. And many patients have been trying to lose weight in all kinds of different ways, have not succeeded, and now there is actually an efficacious way of doing that. So I think it brings a lot of hope to patients. I think it brings benefit to the healthcare systems in terms of mitigating some of the costs associated with follow-on diseases. And obviously that's a fantastic opportunity for the industry, and not least Novo Nordisk being active in this particular space.
All right, Lars, really appreciate your time on what I'm sure is a very busy day. Our thanks to Lars Fruergaard Jorgensen. Matt, back to you.
Katie and Lars, thank you very much for that fascinating topic that I think a lot of people care deeply about. Coming up, markets are facing a crucial 24 hours. As if we didn't have a crucial 24 hours behind us, we're looking ahead to Apple earnings and then the U.S. payrolls report with Crossmark's Victoria Fernandez. She joins us next. This is Bloomberg.
I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
News breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is Bloomberg.
This is the countdown to the open. I'm Matt Miller in for Jonathan Farrow. Moments away from the start of trading, we see futures up almost 1% on the S&P, gains on NASDAQ futures and Russell 2000 futures as well. The Russell down almost a third from its peak. There's the opening bell. Let's switch up the board and take a look at some of the other assets you may want to focus on in today's trade. The euro dollar right now trading at 106.55. I think the 10-year yield is the most amazing. Now it's back up to 465.49, but it was down to 462 and change a while back, like 10 minutes ago. NYMEX crude at $80.88. It's just moving around in a range there, sort of giving up the gains that we saw a couple of weeks ago in the 90s. One stock to watch at the open is Starbucks. The coffee chain's revenue beat expectations with consumers still drinking their lattes even in tough economic conditions. The CEO saying, quote, "In the face of macro uncertainty, we remain confident in the momentum throughout our business and headroom globally." Abigail Doolittle has more on this stock. Abby?
Well, Matt, investors really liking this report quite a bit, given the fact that the stock is surging up more than 10%. Its best day since March of 2020. The stock is now higher on the year. Going into the report, it had been down just about 9% or so. Having a lot to do, of course, with those famous pumpkin spice lattes, along with some of the apple croissants, helping the company to achieve record revenues that beat estimates, in fact, by roughly 10%, or excuse me, 1%, $9.4 billion or thereabouts. Adjusted earnings of $1.06. That was a 10% beat. But the comp sales of 8% beat the estimate of 6.3%. So strength right across the board. And some analysts are saying that what investors really like is the fact that the U.S. seems to finally be recovering. There was a sequential improvement in traffic versus the year over year and 2019. The U.S., of course, has been weak. So right now, investors, again, really liking these results from Starbucks as folks are buying more lattes than they had been. And the guidance, even though it's a smidge light, investors looking right past that.
For now, right? I want to point out, Abby, that if I could just get some Wegovy, I could probably phase out the lattes and the apple fritters from Starbucks. Abigail Doolittle there on S-Bucks. Turning now to fintech PayPal, on track for its biggest gain in nearly a year after boosting its profit outlook. The new CEO saying, quote, "We must harness our strengths and put the weight of the organization behind our most important priorities." Ed Ludlow joining us from San Francisco with more. Ed?
Yeah, good morning, Matt. PayPal's pared some of its early gain, currently up 4% and on track for its biggest jump since February of this year. At the open, had its biggest jump in a year. And as you said, this is about the volume of transactions coming in on the platform way above street expectations. $387.7 billion of total payments, a gain of 13% year on year and ahead of expectations. They also raised their EPS guidance for the full year to grow by 21% to almost $4.98 per share. We have a new CFO at PayPal as they rebuild the C-suite. Jamie Miller comes in from Ernst & Young effective November 6th. And remember, this is Alex Chriss, the new PayPal CEO's first earnings report. He's essentially a month into the job. One kind of surprise disclosure or more negative news, but it's not really weighing on shares, is that PayPal has received a subpoena from the U.S. Securities and Exchange Commission relating to its work on a dollar-linked stablecoin, which you'll find interesting in the context of the crypto show. The subpoena is asking PayPal to hand over documents tied to that project, and PayPal says in a regulatory filing that it is complying with that request.
Absolutely fascinating. All right, Ed, thanks very much. Ed Ludlow there. He co-anchors Bloomberg Technology every day. You can catch him at noon with Caroline Hyde. Let's turn to fitness now. Peloton falling after delivering a weak outlook for quarterly sales. The CEO writing in a letter to shareholders, quote, "We were less successful at engaging and retaining free users and converting them to paying memberships than we expected. This will be a long-term work in process." Isabel Lee has more on Peloton. Isabel?
Hey, Matt, the stock is now paring some of its losses after being down by almost 10% in pre-market trading. Now it's up slightly by around, it's kind of flat actually, but still it's a reversal from the glory days that we saw during the pandemic when sales really plunged now that people are back in the office and gyms reopened. Maybe their Pelotons are probably gathering dust. Peloton said sales will be between 715 million to 750 million, so that's well below the analyst estimate. The company sees full-year revenue coming in flat, and when it comes to app subscriptions, the company expects it to fall around 6% during the fiscal year. So Peloton really has struggled to convert some of its users into paying customers, and in a bid to slash costs, the company has offloaded businesses, laid off workers, and shut down some of its retail stores. Even so, of course, the CEO is optimistic that they will return to growth in the second half of the year. He credits this to new programs and partnerships like companies with Lululemon. And for context, Peloton is now down by around 40% year to date. It's on track for its third straight year of losses after a 450% gain in 2020, Matt.
All right, Isabel, thanks very much. Isabel Lee talking about Peloton there. I want to just quickly tell you that Ford has Ford and the UAW, with the deal that they made, they have won the first local vote in a key step towards approval of that deal. Of course, the union still has to ratify the deal that its leaders made with the executives over at Ford, and it looks like at least that's heading in the right direction. Ford shares up 1.5%. Let's turn to the streaming space. Roku reported better than expected revenue. The C-suite is writing in a letter to shareholders, quote, "We will continue to operate our business with discipline to defend margins with a focus on driving positive free cash flow over time." Katie Greifeld back with more on Roku. Katie, what do we know?
Well, Roku is absolutely flying today. We know that they added more new users than expected in the third quarter. To get specific, 2.3 million new accounts. For context, analysts had expected about 1.8 million new accounts added in the third quarter, so a big beat there. You add that together with Roku's sales rising more than 20% year over year to $912 million. That topped the consensus estimate of about $857 million. Now, all of that was good enough news to outweigh the fact that you did have losses swell more largely than expected. In the September quarter, that came in at $2.33 a share. Analysts had been looking for a loss of $2.08 a share for the third quarter. But even still, you take a look at the sell side right now, and they are psyched about some of these numbers. JP Morgan writing that what really stood out was the profit upside, and Piper Sandler noting that Roku is executing well amid this uncertain environment. You add it together, shares currently up, what, about 16% right now? That is the best day since July, adding on Roku's 70% year-to-date gain.
Wow, on fire. All right, thanks very much for that, Katie Greifeld. Now, Crossmark's Victoria Fernandez weighs in on consumers so important to this economy. She writes, quote, "They continue to be a piece of the foundation that is holding up the markets even with the headwinds we currently face." She joins us now. And Victoria, you know, I've got a list of concerns about the consumer, starting with the drop in the savings rate, going to putting so many more purchases on credit cards. I think I saw this morning that for the third quarter in the row, consumers who could pay a $400 emergency payment can't do it in cash. And we have student loan payments resuming. So can we be at all optimistic about the U.S. consumer?
Well, I never want to count the U.S. consumer out, Matt. They always seem to come back and have some strength when we least expect it. But you're right, there are quite a bit of headwinds facing the consumer. You look at the first 9 months of this year, and we actually saw disposable income for consumers up pretty significantly. That's turned around in the last few weeks. We're starting to see a little pullback there. But consumers, their net worth is actually increased this year. And so their need for savings has declined. And I think that's a nuance that we forget to look at when we're saying, oh, wait, savings is coming down. There's not as much cushion there. The consumer doesn't quite feel it that way. And obviously, tomorrow is the labor report. If the labor market continues to be strong, we had jolts already this week. Those job openings continue to be there. We do see quits. The number of quits starting to come down a little bit, which tells us maybe we start to have a little leveling out here, but the consumer still has strong wages. They still have some money in savings. Their net worth is higher, and we are heading into the holiday season where spending is going to continue. I think where we're really going to see the consumer get hit is probably the first quarter of next year, and it's one of the reasons maybe we saw the market pull back a little bit over the last couple of weeks, minus what we saw yesterday and today.
How hard do you think that hit's going to be, Victoria? Because I feel like once the tide turns and we start to see the joblessness rate rise at these interest rates, if you've got a big credit card bill that you're rolling over, it's going to start to really hurt.
It absolutely will, and that's key. It's no different than you look at the government, right? We've got interest expense that's 14% now of our tax revenues. You're going to see the same thing when it comes to the consumer. After, I think, the holidays, when we'll see some of that revolving credit and those credit card balances increase, and we're still at high interest rates, it is going to start to hit when we're also not going to see the level of wage increases that we have seen over the last couple of years. The consumer will take a hit. The question is the high-end consumer going to be able to step in and keep that foundation under the economy that they've been able to do, or are they going to pull back as well? I think we're going to see a pretty good normalization or pullback from the consumer heading into the beginning of next year. I think it's why, even though we're having a little bit of a rally right now in the equity markets, we should still be prepared for a larger pullback or mild recession coming, and we're seeing it a little bit in earnings expectations being pulled down for 2024 as well, as pricing power is drifting away from companies.
So, I mean, we have seen 4 days in a row of decent gains for equities. We've seen investors going in to buy treasuries, pushing the yields down. Right now, we're looking at the 10-year yield at 4.6. Is that, you think, good for equities, or is it worrisome because the Fed did leave the door open for a rate hike if needed?
Yeah, it's a conundrum really when we look at it, because I think a lot of what we saw with rates moving higher previously was the market actually anticipating that the Fed was going to continue to increase rates. It's kind of like a self-fulfilling prophecy. So yesterday, even though we didn't really get any new news from Powell, he did take some of the hawkishness out, even though they left it open for another rate hike, which I will say I won't be surprised if we get one more. But I think the market is saying, okay, we're probably getting close to peak. They're going in and locking in some of these rates, but they're also seeing that inflation expectations are not becoming ungrounded. They're liking kind of where that's moving right now. And we saw unit labor costs this morning really drop, and that's going to be positive for the companies as well. So there's some reason that we're seeing the yields come down a little bit. And I think we probably did hit the high at a 5%. on the 10-year Treasury. We've been buying in the longer end of the curve, locking in rates, doing a barbell with buying in the shorter end as well. And I think that people would be wise to do that.
I missed it. I'm kicking myself. And this equity rally, the biggest 4-day rally since January, I'm hearing from the control room. So really a lot of conviction, it looks like, behind this. What do you like, Victoria? I mean, do you just buy a basket of the Magnificent Seven? Do you like an index? The Russell 2000 has been absolutely crushed since its highs. Are there sectors that you're interested in? Tell me what you like.
Yeah, so I think you have to be careful here, though, Matt. We're not saying this is a sustainable bull rally. We've been in a position, some contrarian indicators saying it's time for a little bit of a rally. But again, we think we're going to see a bigger pullback. So we like some of the names like in the healthcare space where we have a little bit of defense still in the portfolio. But we think as names have pulled back over the last few weeks, you can go in and buy some things. Lowe's is a name we like. With housing, having the issues that they're having, home improvement will probably pick up a little bit, and we've seen the valuations come down pretty significantly there. And Adobe in that tech space, that's a name we like as well. So I think you need to spread it out, have a little diversification. But look, interest coverage is the #1 factor in the S&P 500 right now for best performance. So look at quality companies. Don't just go in and buy something because the prices come down.
All right. Great context there. Thank you for reining in my sensationalism. Victoria Fernandez from Crossmark. Coming up, investors hoping that Apple results will help salvage a mixed earnings season for the mega cap tech stocks. That conversation next. This is Bloomberg.
Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's always for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
The iPhone remains like an exceptional product. You know, this is the only phone at a 3nm manufacturing node for the main chip. Exceptional quality, exceptional like integrated software and hardware, etc. So I wouldn't say the Chinese are going to put out a phone that can compete with the iPhone, but we know that in the past, about 20 million phones were selling at Huawei, and when Huawei disappeared, that market seemed to have moved straight into Apple's hands, and that's a concern.
Pierre Ferragu there of New Street weighing in on Apple. But first, chip giant Qualcomm delivering a better than expected revenue forecast, casting hope for a smartphone market rebound. The company's CEO, Cristiano Amon, writing, quote, "As we enter fiscal 2024, we are pleased with our roadmap and product execution, which positions us well across our businesses." Bloomberg's Katie Greifeld here with more on Qualcomm. Katie?
And to get specific on that forecast, Qualcomm expects that sales will be $9.1 to $9.9 billion in the fiscal first quarter. Now, the midpoint of that range is about $9.5 billion. That is well above the average analyst estimate for about $9.3 billion. And of course, Qualcomm, it's the largest maker of smartphone chips. And like you said, these numbers offer some hope that maybe the inventory glut in the smartphone industry starting to be worked down, perhaps as consumers finally start to upgrade their smartphones, especially in China. Qualcomm said that it expects revenue from Chinese phone makers in particular to jump 35% in the current period. Now, for right now, phone demand remains slow, but you take a look at the shares right now, that optimism working its way through. Qualcomm currently up about 6%.
All right, Katie, thanks very much. Talking a little about China, and that's very important for Apple. Reporting today after the closing bell, investors are going to be watching iPhone 15 sales and the device's performance in that region, where some early sales estimates have been sluggish. Bloomberg's Ed Ludlow is back with more from San Francisco. Ed, what are we looking for from Apple?
Yeah, the reality is that on the top line, the expectation is this will be the fourth straight quarter of sales declines that Apple will see. And you have to go back 2 decades to find a slump like this for Apple. You're completely right that the iPhone 15 in the context of China will be a focus. The iPhone 15 went on sale September 22nd, meaning there was about a week left in the quarter of sales that will be reflected in the fiscal fourth quarter financial results. But the third-party data has not been good. Basically, in layman's terms, the first 30 days of sales of the iPhone 15 generation in China in particular have been high single digits below the first 30 days of 2022 when the iPhone 14 went on sale. And as Pierre Ferragu was just discussing in that soundbite, everyone accepts the technology leadership, the cutting-edge in-house processor or silicon inside the handset. The question marks are around the responsiveness of the consumer. I use MODL and look at kind of multiple periods, but you also get a good breakdown of the segment revenue. One bright spot is services, projected to have top-line growth of around 11 to 12% in the quarter. And you'll note, Matt, that some news that went a little bit under the radar is that Apple raised prices across its services and subscriptions recently. That might be a boost. Is it enough to swing the tide? And even though iPhone sales fell year on year in the prior quarter, they'll swing back to a modest gain on the top line this quarter. Why? Seasonality. We're heading into the holidays, and that also often coincides with the launch of a new generation model like the iPhone 15.
Well, and we're looking for, a positive outlook from Apple that will drive growth in the shares. At the same time, Ed, if we get a downturn in the economy, people are going to flock to this stock as a safe haven, right? Because they have like $170 billion in cash and equivalents, and the free cash flow is insane as well. It's amazing that this is a growth, tech growth company, and also a place where people seek safety.
I think it really depends on how much has changed since the last earnings report, because the narrative or commentary from Tim Cook and Eddie Q, the CFO, was consistent with what you just said. They told us that the smartphone market, particularly in North America, was weak. The point of difference was that in the fiscal third quarter, China was a swing. It swung heavily to a gain driven by iPhone. But then the narrative changed, right? They had told us in the fiscal third that going into the end of the year, iPhone would accelerate, including in Greater China region. The third-party data that has subsequently been released contradicts that. On the cash on the balance sheet, we talk about this every quarter. Largely, I guess the story is around buybacks and returning shareholder value, because they ain't going to be out there shopping and buying something ginormous at this stage.
All right, Ed, thanks for joining us on that. Ed Ludlow there out of San Francisco. No one has a better view of the tech sector than Ed and Caroline Hyde, and they anchor Bloomberg Technology every day at noon. So definitely going to be all over the Apple story today and tomorrow from them. Definitely don't want to miss that show. For some of the sector price action this morning, let's get to Bloomberg's Abigail Doolittle. Abby, what have you got?
Well, Matt, we are heading to the best week for the S&P 500 going all the way back to November of 2022, and today is no exception in terms of that bullish attitude. All 11 sectors for the S&P 500 are trading higher. It's notable also that the index is back above its 200-day moving average. The worst sector, staples, and then healthcare, those of course are defensive sectors, so that underperformance is actually risk on or supports the risk on tone. Up top, real estate, discretionary, energy, utilities. So an interesting mix, but we have basically 8 sectors trading up more than 1%. And here's the story of the week. Take a look at discretionary soaring 7%, tech up almost 6%, communication services up 5%. So those are those mega cap tech stocks that have been hit so hard since July. Well, not this week. And interesting that we also have real estate higher with them. As yields go down, those dividends look more attractive.
All right, very good point on real estate, Abigail, and of course we're all watching those big tech gains this week as well. Stock gains, bond gains, coming up, the market moving events that you need to be watching. That's next in our trading diary. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Time now for the trading diary, what you need to be watching through next week. Apple earnings coming out today after the closing bell. Then we round out this week with the October payrolls report at 8:30 tomorrow morning. FedSpeak picks up again next Tuesday, along with more earnings from Uber, Robinhood, and eBay. Then earnings from the House of Mouse on Wednesday. This was the countdown to the open. This is Bloomberg.
life, I've often said, is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you will be.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong? Isn't this a slam dunk time to buy U.S. Treasuries? Soft landing, hard landing, no landing? I don't know. True. What the heck does that mean? I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Brokers studio in New York City to our worldwide audience. We're going to break down that Fed action from yesterday with a couple of really smart voices here. Danielle DiMartino Booth, she's the CEO and Chief Strategist at QI Research. She'll join us in studio, as will Neil Grossman. He is the founder of TKNG Capital. He'll be in studio. He's going to have some opinions. I'll just leave it at that. And then Jody Laurie, credit analyst with Bloomberg Intelligence, joins us to discuss the merger between Six Flags and Cedar Fair.
Oh, a merger of equals?
Yes. And Cedar Fair's. It's an Ohio company, Cedar Fair.
Yeah, Cedar Point, up in Sandusky.
Nice.
Love it. Riding the Gemini.
Big merger. And John Tucker's a big fan of Six Flags. Great adventure in Jackson, New Jersey. He's there all the time. He's got the season pass and everything. But we're going to kick everything off with John Tucker and Bloomberg Business Drive.
All right, I'll get to that story at the end then. Investors betting the Fed's done. That has risk assets rallying. Treasury yields, they are falling in the S&P 500. All 11 major industry groups higher. Real estate, consumer discretionary in the lead. Apple has the top weighting in the index, and it's going to report after the close of regular trading today, up right now 1.4%. Are the Fed rate hikes over? We put that question to Kim Crawford at JP Morgan Chase.
I think there was a dovish tinge to it, but these hikes are still on the table. They still are data dependent, and I think they're giving themselves a few months to just see if this recent tightening in financial conditions, whether that will feed through into the labor market and growth data.
And the long bond right now, 8 basis points lower. 484, the 10-year down 6, 467. The more policy reacted 2-year yield That is at 494. 494. That's pretty much unchanged. S&P 500 up 47 points, up 1.1%. 4285 in the index. The Dow up 273 points. The Nasdaq 100 up 170 points, up 1.1%. And Six Flags shares up 2.4%. So you go to the animal park with your car in Jackson, New Jersey. This is how we roll in Jackson, New Jersey. The car ahead of me has all the windows down in the giraffe part of the park, and the giraffes are sticking their head entirely into the car, and the kids in the back seat are feeding the giraffes Cool Ranch Doritos.
Oh, I'm definitely
which I gotta
there.
say is not in the wild. I mean, I'm not an animal expert, but on the plains of the Serengeti, I'm guessing they don't have Cool Ranch Doritos, and
That's why their heads are in the car.
Exactly.
They're like, enough of these leaves. We want Cool Ranch Doritos. By the way, I once thought seriously about getting a giraffe as a pet. And I looked into it.
In Westchester?
No, I was living in London at the time. So I looked into it. And apparently the average giraffe, I'll never forget, eats 75 pounds of leaves a day. 75 pounds of leaves a day.
Unless they're presented with an alternative.
Cool Ranch Doritos.
As we do in New Jersey.
A great adventure in New Jersey. Exit 7A off of that New Jersey Turnpike for the folks coming in from out of town. John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. How do you find it on YouTube? You go and you search Bloomberg Radio, and it takes you right there. How easy is that? Nice market move higher today across the board. Lots of earnings today. Big one after the close with Apple. Let's check in with Bailey Lipschultz. He covers the markets for Bloomberg News. He joins us here in our Bloomberg Interactive Broker Studio. What are you looking at today, Bailey?
Yeah, plenty going on. The one that stands out right now, leading the S&P 500, is Starbucks, ticker SBUX. Right now up 11%, surging the most since March 2020, or March 20, excuse me, or March 2020. Geez.
Wait, March 20th?
March 24th, 2020.
Okay,
Numbers are
okay.
really hard for me right now. Beating expectations, they did see same-store sales rise 8%, surpassing expectations for 6.3%. So as we see consumer strength continuing, Ozempic be darned, people are continuing to line up to buy iced lattes.
That was my first thought when I saw the Starbucks news. I thought, if I could just get some Wegovy, I wouldn't be there for a venti iced latte and a cinnamon toast bread or whatever they serve. And I think that's something that they should be careful about.
You're worried about Ozempic actually hitting the bottom line?
Yes, of a place like
I was gonna
Starbucks
say,
especially.
I like the differing opinions.
Just wait, dude. You got to hit the blue button. No one can hear you.
Okay, only a handful of people are going to get Ozempic, right? Relatively speaking.
So Ozempic is mainly for diabetes, right? Wegovy is the one that Novo Nordisk sells for weight loss, but Mounjaro is Eli Lilly's competition, which people I think are even more bullish about.
Because that's a pill?
No,
it's
it just has a cooler name,
Okay.
Mounjaro. And then Pfizer and Amgen are looking for pills. We just talked to the CEO of Novo Nordisk, Lars Fruergaard Jurgensen, and he was saying, I said, listen, dude, I'm worried about the stomach problems. I've seen reports about suicidal thoughts, and I don't want to get a shot every week. Like, I already don't have time to go to the gym because I'm on my couch eating a pint of Haagen-Dazs. Where am I going to find the time to go to the doctor and get a shot every week? He said some people really like getting the shot every week.
I don't know.
Weird.
I don't know what people like that.
Am I going to sell my Starbucks because of that? I don't think so. What else you got, Bailey?
Moderna down 5.4%. At one point was down 18%, largest drop since November 2021. This is a stock down 85% from a August 2021 peak. Right now, still worth $27 billion, but weak sales forecast, talking up kind of the potential for mRNA in different treatment areas. The focus, obviously, on cancers and a lot of that untapped potential. I know you guys have talked to management from that company, but really taking it on the chin again and again for a company that at one point was among the largest biotech companies, and not drawing a parallel to Ozempic, but when COVID was in the depths of it.
Yeah, I mean, there are some parallels, because one of the, I think, more hopeful threads from Novo Nordisk, is that they think the GLP-1s, the semaglutides, could also be helpful to fight osteoporosis and Alzheimer's disease. That's big. And you know that people think mRNA could, well, certainly the people that work there think that mRNA technologies could work as well. I'm just hoping somebody finds something to battle this horrible disease.
I think they will.
Yeah.
Hey, let me just call out Ford here just for a minute because they're tapping the investment-grade bond market for the first time after being upgraded earlier this week. Stock's up 1.2%.
And they had a local vote go the right way. So you know that the UAW and Ford agreed in principle on an end to the strike. Now all the UAW members have to vote on it. And the first local vote, we got the results, and it went the right direction. So I think that's another reason to be bullish.
Good sign. Bank of America, Citigroup, JP Morgan Chase, they're leading this bond deal. But the company was downgraded to junk in 2020. So now they've been upgraded by a couple of rating agencies. That's good for them. They can refinance that balance sheet a little bit better. Anything else there, Bailey?
Dentsply Sirona, ticker XRAY. They make dental devices and things for whenever you visit your dentist. Down 12%, worst performer in the S&P 500, or among the worst performers in the S&P 500. And one other stock that is rallying just a touch right now, PayPal, ticker PYPL, up 3%. Looking at analyst reactions to results, kind of meh, but the big focus is on the new CEO laying out profitable growth and talking up profitability, and that's really been kind of the story of Wall Street for the better part of 11 months at this point.
Yeah, PayPal market cap, the good news, market cap of $57 billion. The bad news is down 25% year to date, down 32% on a trailing 12-month basis. So it's trying to find a footing there in that. They're trying to get a little of that fintech love. Yeah. But it's just kind of one of those household names that it's not making that transition. But new management in there, we'll see how that plays out. All right, Bailey, thanks so much for joining us.
We didn't get to talk about his...
What do you want to talk about?
He did the tastings yesterday for his wedding.
Oh, yeah.
And so...
Bring it up.
How much food did you eat yesterday?
So much food. A lot of desserts. The best thing was a salmon with lump crab meat and asparagus. That was far and above the best entree we had.
So did different food vendors come in and you tasted their stuff and then you picked from that?
The Park Savoy, where we're getting married...
Class joint. I've been there.
They do everything. So you sit down...
Really?
Yeah. I wonder how much that costs.
Oh,
so
dude, whatever your wedding is, 10x it. That's what these kids pay.
So, but they bring a whole bunch of different...
They brought out 4 different past orders to pick from. They brought out each of the 4 of us got a surf and turf, plus we split 2 different chicken entrees, 2 different seafood entrees, and then they just brought out an entire platter of all the cookies and
Thank God you're not on Ozempic.
Exactly.
Yeah. Well, Matt and I will be there, pigs in a blanket. That's all we request,
Yes.
right? Pigs in a blanket. All right.
Free drinks.
Yes, exactly. And the Uber on you. All right, very good. Bailey Lipschultz covering the equity markets for Bloomberg News and getting married. What a knucklehead. Getting married. Danielle DiMartino Booth joins us. She's the CEO and Chief Strategist at QI Research. Danielle, the market likes what your Fed Chairman Jay Powell had to say yesterday. What's your takeaway?
Well, he didn't say much.
Okay.
I mean, at the beginning, he kind of read a lot of his answers. I'm like, dude, you're still reading. Your statement's over. Quit reading already.
I thought that was weird. I listened to it on Bloomberg Radio. And I thought...
It was awkward.
Why isn't this guy, taking a stand one way or the other? Why even bother having the press conference if you're not going to say anything?
The dot plot, it's meaningless. We've got all these employment reports and CPI reports before we get to December 12th and 13th. So disregard that. I mean, it was... I'm like, dude, do you know you're talking out loud? You're like on TV.
TV, right?
Yeah. I mean, this... And I think what was disappointing was that so many of the reporters asked the same regurgitated question. We reworded over and over and over. I'm like, can somebody please take off the gag order and let somebody ask him about the balance sheet already?
All right, tell us about the balance sheet. What would you like to know about the balance sheet?
I mean, gosh, you've seen other deposits, liabilities. My mentor, Dr. Lacey Hunt, I follow them every single week. We're about to break underneath 15 trillion when the data hit tomorrow afternoon.
Wait, what did you say about Lacey Hunt from Hoisington, right?
Yeah, he's my mentor.
Oh,
so
cool.
he's taught me how to, I mean, every single week the Fed's data comes out and it shows you weekly liquidity on bank balance sheets. And you've gone from just about 17 trillion to next week, tomorrow afternoon, you're going to break 15 trillion. You've had $2 trillion of liquidity sucked out of the system. Because there's like a 1.5 multiple on every dollar of quantitative tightening shows up as $1.5 of liquidity being pulled out of the system, which is why your BCY go function's on fire.
Okay, you've lost me and Paul already. I'm going to say
BCY
I can
go.
see Paul's eyes
That's
glazing
your
over.
bankruptcy function. Look, it's companies rely on liquidity. And right now we're seeing banks continue to tighten lending standards. I mean, I'll be up and ready on Monday morning for the senior loan officer survey, but the Dallas Fed has a more frequent lending survey, and it's just getting tighter and tighter and tighter. Everything we heard from Capital One, Ally, they're seeing normalization in defaults, in credit card delinquencies, in auto defaults.
Wait, you said normalization, doing air quotes with your
normalization,
fingers.
air quotes. That means it's going above subprime.
Yeah.
So it's not contained to subprime. I love to quote Bernanke, but it's not contained to subprime, and that's what we're seeing. We've seen about a 12.5-fold increase of prime auto loans being downgraded into subprime territory based on where they're trading right now on bank balance sheets. We've never seen anything like this. And it's because when you put the rent on hold, the auto payment on hold, when you pay people $2,500 extra a month, when you put the mortgages on, everything went on hold. So we saw, and Moody's has done some good work on this, we saw insane levels of FICO score inflation during the pandemic, and now it's all coming back to bite because wages just aren't there, and layoffs are.
So
you've got continuing jobless claims up 6 weeks in a row, north of 1.8. They're just on top of where they were in 2016.
So is your biggest concern that the consumer is not nearly as strong as maybe we think it is?
Well, I think the consumer's telling you they're not as strong. I mean, if you looked inside of the final University of Michigan consumer sentiment print at the medium tercile and top tercile of earners, they're like, job cuts are coming. And it's the lowest tercile that doesn't see it coming, but we're seeing it come out in the data week after week after week. I was talking to dailyjobcuts.com, the founder, and he's like, November is seasonally a quiet time. People don't fire people into Thanksgiving and the holidays. And he's like, they've come out of the gate. He's seen 25 companies close in 2 days.
This is the Austrian hangover, coming after all of that insane stimulus. It's still going on. Remember that Keynes versus Hayek rap video?
Well, look, I mean,
from the great financial crisis.
You've got some people are going to be paying their mortgage for the first time in December. That's how long FHA forbearance has been going since March of 2020.
All right, I got a listener question here, writing in. Did Danielle listen to the Druckenmiller interview with Paul Tudor Jones? Stan thinks rates are going higher because of an out-of-control debt profile of the U.S. Do you agree?
I don't.
No.
I know. I mean, we've been spending like drunken sailors since Reagan was in office. It's just, I think Wall Street wants a narrative right now.
But you know, Reagan boosted spending on the military.
He did?
We were talking yesterday to Paul's mentor, Cam Harvey from Duke, and he pointed out that next year we're going to have interest payment costs of $900 billion. We're going to pay more to service our debt than we do to fund the military.
Yep. Actually, we passed that up at the end of the fiscal year. It's about $685 billion for military, $808 billion fiscal year ended August 31 interest payments. So we've already rounded that. And the shame about the fiscal spending right now is it's not doing much. It's not creating anything. Like, there's no Hoover Dam, there's no Holland Tunnel. There's so little that's being created.
They're working like crazy out there. The people out in Jersey, right, John Tucker? They were building like
Oh yeah,
new
I mean,
tunnel
the number of
coming
those
into New Jersey.
gigantic cranes by the Gateway
good.
Project.
So my question,
I stand corrected. Yay, we're building a tunnel.
Yeah,
It'll be ready in 20
only thing
years.
we care about in
I'm always
capital,
on the bridges
infrastructure.
going to LaGuardia. Sorry.
Yeah, exactly. So is recession in your scenario? In your
I
outlook?
think recession starts the current quarter.
Okay.
This quarter, Q4,
We have,
2023.
as of this morning's jobless claims data, the only state holdout right now that does not have rising, continuing jobless claims year over year is Kentucky. Well, I mean Florida, but that's a base effect from Hurricane Ian, so that's going to go away here. But that's it. I mean,
so
September 2022, there were 0 states with rising, continuing jobless claims. Now we got 50.
Okay, so you have a recession in your outlook. How deep, how long?
I think it's going to last longer than we think because we've pulled so much demand forward. We're seeing one furniture company after another go out of business that have been in business for 100 years because we pulled so much demand forward with all that stimulus money.
All right.
That's the hangover, dude.
It is a hangover.
Yes.
But it's not as funny as the movie.
So, so should the Fed, what should the Fed do here?
I think the Fed's on hold. I really do. But again, it's about the balance sheet. Nobody's talking about Voldemort. I'm saying it out loud. It's about the balance sheet, people. It's real.
The worry is that the Fed went too far, right?
Yep.
Because like Cam said, if you take out whatever they call it, rent equivalent, inflation is below 2%. And our buddy Jay Hatfield from Infrastructure Capital,
another smart one,
he's got his CPI-R, where they replace the housing component with a Case-Shiller, and that's 1.3% year over year compared to the 4.3% that we're looking at.
But everything's great in Dallas, right?
Well, no.
Oh,
actually,
come on.
warn notices in the state of Texas have gone through the roof.
Really?
That's what's hard to believe, and it's no longer like super cheap to live there. So I mean, Austin's a cesspool of when it comes. It's residential real estate, ground zero. It's a mess.
I love a good
And I'm a
cesspool.
Longhorn, and I mean, I love Austin, but they overbuilt.
They overbuilt, and they don't have any infrastructure for the traffic.
But they have Lime scooters. That's all I care about. Bird
Danielle
scooters,
DiMartino
you know?
Booth, CEO and Chief Strategist,
Hook 'em
QI
horns.
Research with the latest call.
Thank
We'll
you.
have more coming up. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
All shares of Delta are up more than 1.5% after the carrier announced it's cutting jobs. Bloomberg's Tom Busby reports.
In a statement, the carrier wrote, quote, "While we're not yet back to full capacity, now is the time to make adjustments to programs, budgets, and organizational structures across Delta to meet our stated goals." Now, that goal is to save money, and the cuts will not impact pilots, flight attendants, or mechanics. Delta calls it a, quote, "small adjustment," but won't yet say how many white-collar workers are being axed.
Calm last month, Delta trimmed its full-year profit outlook due to rising fuel costs. Toyota is boosting pay for assembly workers in the U.S. The latest from Bloomberg's Jeff Bellinger.
Steve, sources tell us Toyota plans to increase the highest wage for most assembly line workers by more than 9% to $34.80 an hour starting next year. The move by the Japanese automaker follows major gains negotiated by the United Auto Workers in the new contracts with General Motors, Ford, and Stellantis. Toyota employees are not unionized, but UAW President Shawn Fain aims to expand the group's reach beyond Detroit's Big Three by 2028.
Thanks,
Steve?
Jeff. Boeing has confirmed it's dealing with some kind of cyber incident that targeted elements of its parts and distribution business run by its global services division. The company says flight safety is not affected, and it's actively investigating the incident. A cyber gang with ties to Russia claimed last week that it would start releasing sensitive data if Boeing does not pay a ransom by today. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets with Paul Sweeney and Matt Miller right after this.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We have a risk-on rally. All 11 major industry groups at the S&P 500 are higher. Real estate and utilities in the lead right now. And then you have Treasury yields. They are plunging on bets that the Federal Reserve is done with its current cycle of interest rate hikes. And after the close of regular trading today, Apple opens its books. Its shares right now, they are up 1.5%. Starbucks, one of the best performing stocks in the S&P 500 after its earnings report, it is up over 10%. The yield space, the long bond right now, 11 basis points lower. That's a big move, trust me, down to 4.81%. The 2-year yield, that's at 4.94 right now. The 10-year, 8 basis points lower. That is at 465. S&P 500 up 48 points, up 1.2% at 4286 on the index. The Dow Jones Industrial Average 283 points higher. The Nasdaq 100 up 159 points. That is a 1% pop right now. You've said in your next life you want to be what, in private credit?
Yeah.
Okay. According to two PIMCO executives, risks are building inside the $1.6 trillion private credit market. Regulators, they say, aren't doing enough. So they're complaining that
I think that's right.
under-regulated and also lacks transparency.
Yeah, it's going to take a blow-up or 2 or 3, and people are going to say, wait, what's all this money over here?
In the meantime, they're making money hand over fist. Yep. But anyway, that is your Bloomberg Business Flash. I'm John Tucker.
That's the best way to make money.
What's that?
Hand over fist.
Hand over fist, absolutely.
I'm not sure where that comes from.
I don't know either. We should find out because, like balls to the wall, I got so much flack for that.
But of course you bring it up again.
Use it
well, because everyone should know by now that it's from airlines. It's not.
Well, fighter pilots, when you push the throttles to the firewall.
But hand over fist, where's that come from?
I don't know, but we'll fire. John, when you come back next time, see if you can figure out where hand over fist came from.
I'm on it. I'm on it.
All right. On the way out was a really smart voice, Danielle DiMartino Booth. On the way in, an equally smart voice on all this market stuff and Fed and all that kind of stuff. Neil Grossman, co-founder of TKNG Capital, joins us here in our Bloomberg Interactive Broker studio. So, Neil, you probably heard Danielle, but she was painting a very bearish picture. She thinks the economy is much, much weaker than the data suggests. She thinks the consumer's weaker than the data suggests, that perhaps the Fed has gone too far. What's your take on this economy?
There are certainly some areas of the economy that are weak. I mean, certainly housing. I think on a relative basis, there is embedded weakness. If you look at the employment numbers, statistics, a lot of this is all relative, right? And last year at this time, we were adding 450 to 500,000 jobs a month. We're now adding 200 to 250,000 jobs a month. Traditionally, a 200,000 job a month pace would have been pressing the Fed to actually remove liquidity. But if you're dropping 200,000 jobs a month, that's 2+ million jobs a year. When you look at the income impact and things of that nature, there is an embedded slowdown coming up just statistically.
I got to ask, because there's so many things that are going right. We had, or it seems like it, third quarter GDP 4.9%, right? We had we had a massive consumer spending. I think 0.4% was the rise, and that was even taking away inflation. We have, I saw in a Claudia Sahm column that the average American's net wealth has gone up 37% since 2019 to 2022. Now, that doesn't take into account whatever's happened this year.
Well, Matt, let's do a couple of things. First of all, spending in the economy. The most important thing to look at is what's the year-on-year change of government spending. If the U.S. government is spending an extra $1 trillion this year relative to last year, which is 4% of GDP, nominally, real, it doesn't make a difference. It's going to be very hard for the economy to slow down. The same thing going back to consumer spending. The amount of debt, if you deficit adjust all this, right, there is not real increase. All we're doing is continuing to front load the government's long-term borrowing. They're throwing it into the economy. Yeah, if the government gave me, I've been asking them to send me $280 billion so I could.
Well, they may pretty soon. I mean, as Danielle DiMartino Booth points out, we've been doing this since Reagan. I mean, everyone is getting louder and louder about deficit spending, but only for like a couple of years under Bill Clinton did we have a balanced budget?
Well, two things. First of all, we had a $75 million budget surplus, $1 million, I believe, a budget surplus in 1969. Don't forget that.
Okay, that was a little bit before Ronald Reagan.
Also, interestingly enough, Bill Clinton ran cash surpluses. No doubt about it, and they're quite good. In fact, if you remember, I worked for the Central Bank of Norway back then, and we were going down to understand what they were going to be doing to their borrowing needs. Stan talked about this yesterday. They actually cut the long bonds at that point. But the interesting thing is they also had gimmickry in how they accounted. There were a couple $100 billion worth of embedded savings that they were able to project that weren't real. For example, the government was buying back outstanding debt, and they chose to buy high coupon debt. Why? Because from an accounting perspective, they were able to say they were reducing the deficit because they were allowed to exclude the fact that the premium they were paying for bonds, which were trading at 150 to 180.
Okay, as Walter Sobchak says, say what you will about the philandering of Bill Clinton. At least he balanced the budget, right?
Yes, it was the only few good years functionally in a long time when it comes to fiscal.
You mentioned Stan Druckenmiller. He said he was like leveraged long the 2-year because he was starting to get worried, and we've heard those similar concerns from Ackman and Gross post October 7th attack on Israel. Are you just as worried about the economy, about deficits and deficit spending? I mean, do you think we're going to go into a real recession here?
How far do you want me to go? I think Stan is about the smartest guy out there. I agree with him, or he agrees with me, if make myself look better. Look, we're running numbers. You talked about the fact that we're beginning to push spending. $600-700 billion a year now in debt service. You're ignoring the fact.
Yeah, $900 billion next year.
It sounds bad, but the government just raised its estimate for the demand for more funding next year by $2.4 trillion. Understand, you're ignoring the fact that we're running massive deficits. If you have to borrow $3 trillion, and part of that $3 trillion borrowing is to pay more debt service, the $3 trillion number, the $4 trillion number is to me the bigger problem. Cutting spending is very problematic. And if you look forward, of course, you have 8 or 9 years before Social Security, all the money that's been saved is gone. That will add someplace, the estimates are like $700 billion early, but I guess knowing this government that underestimates it. And from that point on, the cost of funding
becomes a debt
bomb. I think there are some embedded stabilizers in the way the government will do it when it hits that, but I'm pretty sure if they want to tell somebody retired that they're not getting paid, it's going to be a problem.
What did you take away? What did you hear from Fed Chairman Jay Powell yesterday? What was your takeaway?
Standard stuff. He doesn't want to, he wants to make people think that they're still biased towards eliminating or at least reducing the rate of inflation down to 2%, but they don't feel that they need to do any more. The one I found, he was talking about
Well, do they? I mean, yesterday we talked to Cam Harvey, Paul's former professor at Duke, and he said if you take away the equivalent rent part from core CPI, you get down to less than 2%. And Jay Hatfield, who's coming on the program tomorrow from Infrastructure Cap, his CPI-R index says we're at 1.3%.
Yeah, I think if you actually really want to do it right, inflation X everything that mitigates against what you want is zero, right? I mean, over time, and this is one of the other problems, over time, all of these things average out. We are probably slowing to some extent, but if you look at the cost, for example, of what it costs to construct new housing and the cost of actually maintaining housing, it's why rents have upward pressure. It's why costs are not going down just because of this over the long run. Until we wring out a lot of these excesses and find a way to mitigate the problems, all of these things propagate. And this is, look, I think we've talked about this. The biggest problem I have among this 2%, which is what the Fed maintains as its target, Mr. Powell does not, for whatever reason, want to acknowledge it's not only about getting there, it's how long it takes you to get there, and it's how long you're going to keep it there. If it takes them 4 or 5 years to get to 2%, and we have embedded an average of 4.5% inflation or whatever it is for 5 or 7 years. Those shock waves don't go away. And they're not willing to say we need to get inflation to 2% immediately, and we need to maintain it for an extremely long period of time because the political consequences are difficult.
All right, Neil, good stuff. As always, appreciate you making the time to come into Bloomberg Interactive Broker Studio. Neil Grossman, co-founder of TKNG Capital there, breaking it down. The market likes what they heard from the Fed. They had that rally yesterday.
Neil the Vintner, I should say.
And the Vintner.
This is why he's really my favorite guest, because it comes
And what did
gives.
Mr. Grossman bring in for you today, John?
This would be a lovely Pinot Noir 2018.
Nice.
And from Millbrook, right?
From Millbrook.
From Millbrook.
But not Millbrook Vineyards. It's from my vineyards.
Yes, from Canoe Hill.
It's Elizabeth Vineyards.
Elizabeth Vineyards.
All right. So bringing some grape, always a nice way to break the ice. And Mr. John
Thank
Tucker
you, Neil.
will enjoy
By the
that.
way, one last thing. If you really want to get the Fed on the right track, we just should be sending them wine to drink.
Yes,
during the
exactly
meetings.
right. All right, very good. Let's head down to Washington, D.C. right now. Amy Morris has got World National News.
All right, thank you, Paul. Israeli forces have encircled Gaza City, trapping hundreds of thousands of people in what the New York Times describes as a total siege, while 400 U.S. citizens are waiting to see if they'll be allowed to leave. Now, Hamas had said nearly 600 people could go. Bloomberg's Roz Matheson is the news director for Europe, the Middle East, and Africa, and says the group that is to be leaving is made up mostly of people who are wounded, but that's not all.
But also those who are holding a foreign passport. So they've got passports from Australia, Asia, the US, and elsewhere. And it's a really small number of people in the end, when you think about the number of people who are currently bunched up inside Gaza.
Roz Matheson is Bloomberg's news director for Europe, the Middle East, and Africa. An attempt by fellow New York Republicans to expel Representative George Santos from the U.S. House fell short last night. Santos says the vote was a victory for due process.
I feel like due process is still alive. I feel like there's enough colleagues on both sides of the aisle here who understand that.
This was the second time Santos survived an expulsion vote. Jury deliberations could begin as soon as today in the fraud trial of Sam Bankman-Fried. Bloomberg legal reporter Ava Benny Morrison was in the courtroom for closing arguments.
Bankman-Fried's lawyer, Mark Cohen, has tended to use metaphors in his jury addresses in this trial, and he suggested that the government had wrongly painted Sam as a villain, as a monster in a Hollywood film about a grand fraud scheme. He said that certainly wasn't the case. Yes, at one point, his client was probably the worst dressed CEO in the country and had bad hair to anyone and everyone, including journalists, had a messy life, but that wasn't a crime.
Bloomberg's Ava Benny Morrison says Bankman-Fried is charged with 7 counts of fraud and money laundering following the collapse of his FTX cryptocurrency empire last year. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. Stocks are rallying today. The Treasury yields, they are falling. The risk-on rally comes on speculation that the current rate hiking campaign by the Central Bank of the U.S. is over. We also had data today showing some softening in the otherwise sturdy labor market, and also worker productivity is up, so that tamps down on inflationary concerns. Is the Fed's latest message hawkish or dovish? Sarah House at Wells Fargo Security is weighing in there.
So we do think that the Fed is done raising rates. So, on the surface, it looks like another hawkish hold. So keeping the optionality open and signaling that their next move still could be a hike. But, it really wasn't any more hawkish than it had been previously.
Right now, the S&P 500, 61 points higher. That's up 1.4%. The Dow's up 368 points. The S&P 5, the NASDAQ 100, 201 points higher. That is up 1.4%. The long bond, 30-year, that is down 11 basis points. We're at 480. The 10-year down 9 basis points, 464. Among the earnings, Moderna shares tumbling. The company said it expected revenue to fall sharply next year. Ferrari shares jumping after the company raised its full-year guidance. And they also said they're ahead of schedule in fine-tuning components for the latest fully electric prototype. They're going to unveil the battery-powered supercar in 2025.
Boo.
Well, yeah, it's the Columbus Day Parade. One of the sponsors is Ferrari. They're bringing out their latest models. And when those things rev in the canyons of Manhattan and they reverberate, you're just like, it's heart-stopping.
Dude, it's awesome. That's why I want them to have like a Formula One race here.
You're not going to have that sound anymore in a Ferrari?
Exactly. That's one of the biggest problems that I think all car makers need to overcome. Not just the sound, but the vibe and the smell. And by that I mean vibration, not like the kids say the vibe, but the vibrations, the smell, the acceleration, the gradualness of it. Something they have to either replicate, or maybe the kids don't care. I talked to some kids who love to watch Formula E, which is like Formula One but electric, and there's no sound. And for me, going to a Formula One race or NASCAR or MotoGP, it's about the hit that you get in your chest when they run by.
So what are you saying? They could make a fake engine noise in the future?
No, people seem to be against that. Like Dodge is trying it, and Mercedes has done a great job of it, but everyone thinks that's lame, Yeah. But I think if it's a good enough sound, I'm down. I'm down to clown.
All right, good stuff. John Tucker, thanks so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. A little bit of a M&A trade in the theme park business. Cedar Fair, Six Flags, they're getting together, all-stock merger. Let's break it down a little bit. We can do that with Jody Laurie. She covers the entertainment companies for Bloomberg Intelligence from the credit side. So, Jody, thanks so much for joining us here. Boy, I'm looking at the balance sheets of these two companies. They're almost the exact same. $2.5 billion of debt, about $500 million of EBITDA. So they're both levered pretty highly at around 5 times leverage here. From your perspective, what's the rationale for putting these two companies together?
Sure. So, Paul, I think that's a great question. Is that really at the end of the day, why are these companies joining? And I think it really comes down to the fact that the tailwinds that they experienced during the pandemic have sort of petered off. And now they're saying, what's next for these companies? They've experienced tremendous weather-related issues this year that have sort of marred their opportunity in benefiting from people spending on leisure.
Wait, what were the weather? Is it too hot?
Yeah, well, so some places it was too hot, others it was too rainy. It was just, a mix of storms and events that have happened. I mean, you look in the Southern California area, and it was too hot, and then there were floods, and then it was rainy, and it's just, each of their calls, other than this one today, which obviously was just focused on the M&A transaction, but the past 2 quarters, that was sort of the explanation behind it, was we didn't do well or as well as expected, and we didn't get as much season pass buyers because of the effects of weather. And I don't know if that's necessarily going to go away, but I think what they're hoping is the expansion of their footprint will sort of diversify them enough to make it so that weather isn't as much of an issue. I don't know if that's necessarily what I'd hang my hat on, but that's certainly their argument.
Look at Disney. You look at Disney, they love their theme park business. Comcast loves its universal theme park business. Both of those companies are increasing dramatically their capital spending in those businesses. Is that just a benefit of scale, and that Six Flags and Cedar don't enjoy that same kind of scale? So this is one way to get there?
Well, I would say that they definitely have a lot of scale, particularly Six Flags, maybe even some would argue too much scale. It's a different business model when you're dealing with regional versus very focused theme parks, right? So Disney, like SeaWorld, benefits from having Florida, having Southern California. And so that, of course, helps them from a cash flow perspective, more consistency, because they don't have to shut down for part of the year. For Six Flags and Cedar Fair, it's a little bit more regional. The type of customer is a little bit different. It's not as much destination. They're hoping to shift that a little bit, and you're certainly seeing that. You know, Cedar Fair does have hotels at some of their properties, and so I think that the thought process is that once you're a bit larger, you can more actively have a branding and maybe more of a presence everywhere you go. So if you're a card carrier of a Six Flags Great Adventure, you can go to any Six Flags, perhaps, maybe that's the play, is that, you know, a customer can participate in any area.
Wait, can I ask about the dreaded phrase merger of equals? I think they're saying this themselves. Like, they think it's a good idea to spin that. Daimler Chrysler said the same thing, and it was anything but. I mean, what a load of BS. Who's buying whom here?
Right. So they structured the deal interestingly. So Cedar Fair is an LP, or an MLP specifically, so a limited partnership right now. So they have unit holders. Six Flags is your standard C corporation. And the way that they structured it is that Cedar Fair will get 51.2% of the new company shares outstanding. And the reason why they did that is I think it sort of helps them to not trigger the change of control provision for bondholders, meaning bondholders can't then put back the bonds at 101% of par. And so that, of course, frees up some cash for the two companies. It makes it a really stock-for-stock transaction, except for the dividend that Six Flags shareholders get with the closure of the deal. And so I think it's an interesting structure. It makes it a little bit more beneficial for bondholders in some sense, particularly the Six Flags bondholders. We saw the bonds rally today, and that's a function of the fact that, you know, Cedar Fair does, to some extent, they've had better results, at least recently, and their business model has been a little bit more
right. Well, it's
been stronger.
So they have Cedar Point, which I grew up going to that in Sandusky. They have the Beast at Kings Island in Cincinnati. When I was a kid, that was the longest, the fastest, the tallest wooden roller coaster in the world. Jody, you've got, I'm guessing, real amusement park experience. What are the best rides out there? What are the rides that that roller coaster freaks are psyched about?
Well, there are quite a few. It's funny because I have this conversation a lot with, I'm going to name drop Ira Jersey, who sits in my little hovel in Princeton. His son is a roller coaster enthusiast. So we're constantly trading discussions about all the different roller coasters out there.
So which ones are the best?
I mean, I'm a traditionalist. I grew up, well, you know, relative, you know, once it finally came out, the original Batman ride, not, you know, that was in Great Adventure. I just always have a soft spot for that, as well as for Steel Force, which is at Dorney Park. And so, I mean, those are just rides that I always went to just because it was a regional sort of feel. That said, I mean, you know, Disney obviously has its own sort of
Space Mountain.
Right. Well, they have Guardians of the Galaxy now, which was certainly an intense ride. Definitely different. I mean, from an innovation standpoint, they certainly do a different sort of innovation than what you see at the three regional guys.
All right, Jody, thanks so much for joining us. Appreciate it. Jody Lurie, credit analyst at Bloomberg Intelligence, breaking down this Cedar Fair and Six Flags deal. It's a merger of equals, is what they're calling it, but trying to get a little bit of scale in that theme park business. we'll follow it up, of course. This is Bloomberg.
Let's go to Steve Rappaport for some company news.
Paul, shares of Starbucks soared as much as 11% after the coffee chain beat sales expectations for the third quarter. Bloomberg's Abigail Doolittle has more.
The stock is now higher on the year. Going into the report, it had been down just about 9% or so, having a lot to do, of course, with those famous pumpkin spice lattes, along with some of the apple croissants, helping the company to achieve record revenues that beat estimates, in fact, by 1%, $9.4 billion or thereabouts.
Thanks, Abigail. Currently, Starbucks stock is up more than 10%. Jury deliberations are expected to begin this afternoon in the trial of FTX co-founder Sam Bankman-Fried. Bloomberg News legal editor Tony Ahrens has a recap of closing arguments.
The government basically said that Sam Bankman-Fried was a liar. He lied about little things, about big things, and they put together 6 moments where he doubled down on the fraud rather than coming clean. 6 moments where he had a chance to put his hands up and put a stop to it all before it all spiraled out of control. The defense tried to say that Sam Bankman-Fried was not a monster, that he wasn't an evil guy, that he was in over his head, and he never intended to steal money from anyone. It was bad business decisions, big mistakes, not fraud.
Bloomberg News legal editor Tony Ahrens, Bankman-Fried faces more than 100 years in prison if convicted on all counts. Striking actors in Hollywood studios are expected to continue negotiations today for a new contract. The source from the union representing actors tells Deadline they're beyond cautious optimism. And those are the company news stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
The markets certainly like what they heard yesterday from Fed Chairman Jay Powell. The S&P 500 up 1.5%. The NASDAQ up about 1.5% as well. The Dow's up 375 points. That's 1.1%. Yields pulling in sharply. The 10-year Treasury off 10 basis points, 4.63%. And that 2-year, no longer getting 5%, 4.96% on the 2-year, and no longer 5% on the 30-year, now 4.78%. WTI crude oil up just a little bit, call it $81 a barrel. Right now, let's head down to Washington, D.C. Morris has got World National News for us.
All right, thank you, Paul. The United States has imposed a new round of sanctions on 130 firms and people from Turkey, China, and the United Arab Emirates, an effort to choke off Russia's access to tools and equipment that support its invasion of Ukraine. This as President Biden says there needs to be a pause in the Israel-Hamas war, stopping short of calling for a ceasefire. The President and First Lady will visit Lewiston, Maine tomorrow, as some of the first victims of last week's mass shooting are laid to rest. But the town's spirits were lifted last night as the Lewiston High School football team took the field for a game that was postponed from last week. Lewiston Police Chief David St. Pierre.
It is important to realize that this is more than just a game. It is a symbolic return to unity following the tragic event that has shaken both of our communities.
Singer James Taylor performed an acoustic version of the national anthem. There was a moment of silence before kickoff, and Lewiston High won the game, 34-18. Several mayors are in Washington, D.C. today asking the White House and Congress for help, action on the migrant crisis. They include the mayor of Chicago, Brandon Johnson.
We're going to push the federal government just like we're going to push the state of Illinois to do its part. Look, Chicago is leaning in. We have borne the brunt of the responsibility here. That's not an equitable distribution of how government should cooperate.
Also in attendance, mayors of New York City, Los Angeles, Houston, and Denver. They'll be taking part in sit-downs with the Biden administration officials and members of the House and Senate. One of the 5 officers involved in the death of Tyre Nichols is taking a plea deal. A lawyer for Desmond Mills says that he's not changing, or rather he is changing his not guilty plea. He's changing it to guilty. Details of the agreement could be revealed later today, that hearing scheduled to begin just minutes from now. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Matt.
All right, Amy Morris, thank you so much. We appreciate that. Matt, here's a headline for you. Foxconn makes your iPhone. Now it's aiming to make electric cars. Foxconn may be the single most important manufacturer in the world. The company builds roughly 2 out of every 3 iPhones, along with the Google Pixel and Amazon.com's Kindle. The Nintendo Switch, Foxconn. Ring doorbells, Foxconn. The list goes on, including Cisco switches, Dell laptops, and Sony PlayStations. Now, they own the Lordstown Motors plant in Lordstown, Ohio, which was a former GM plant.
Yep.
So maybe they're gearing up to make EVs there.
Yeah, absolutely. I mean, this has long been speculated that maybe they would build the car for Apple,
Yep.
And even if they don't, for someone else. So it'll be interesting to see if they do, especially if they do it in Youngstown, because EVs have become really political, as Bill Ford recently said. And as
See, I haven't sensed it like I have other things, like vaccines, for example.
So I don't know, because I spend so much time in car forums.
Yep.
I can't judge what's happening in the real world in terms of these kind of things.
Yep.
But definitely on the forums, they're incredibly political. And of course, you can see how much pushback Ford got when they wanted to build a battery factory with advice from the Chinese. People just freak out about China coming over to America, especially in the heart of it all, in the great state of Ohio. So if Foxconn goes to build an EV there, I think there would be some concerns voiced.
Interesting. Well, this is the subject of a Bloomberg Business Week article, and they dive deep into this story. So if you're interested in that, check out Bloomberg Business Week and get it at Bloomberg.com/businessweek and check that out. But some great reporting there. So again, they make everything else that we know and love in terms of all the gadgets. Can they make an electric car? Why not? S&P 500 up 1.56%. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, lots of good stuff. We're going to kick it off with Doug Adams. He's a global co-head of ECM. That would be Equity Capital Markets at Citibank. They do tons of deals. We're going to get his thought on the outlook for equities into 2024. Any deal flow. He's going to be in studio, so that'd be cool. Lisa Jarvis, columnist with Bloomberg Opinion, covering biotech and healthcare. She's going to talk to us about the development of these weight loss drugs, and that is just a huge, huge story out there. So we'll get the latest there. And then also this hour, we're going to have a simulcast. Bloomberg's Emily Chang is going to interview Airbnb CEO Brian Chesky on recent earnings. So we'll get the latest on Airbnb. But first, let's kick everything off this hour with John Tucker.
And we have a risk-on rally. S&P 500 heading toward its best day since August. The NASDAQ 100 advancing for a fifth straight session. Right now, the most active shares of Tesla, they are up about 5%, leading the mega caps right now. Yields in the driver's seat falling on speculation the Fed is done hiking rates this cycle. And meantime, BNP Paribas chief market strategist Dan Morris, he sees an economic slowdown ahead.
Yes, clearly the U.S. consumer has been great. At the same time, given where mortgage rates are in the U.S., where the interest rate that you're paying on a credit card clearly is quite high, I think it's more a question of how quickly that demand wanes as opposed to really betting on any kind of growth at the same level that we've had over the last couple quarters.
Well, for now, the S&P 500 up 64 points. That's a rise of 1.5%. We're at 43.02 on the index. The Dow Jones Industrial Average up 403 points. NASDAQ 100, 206 points higher. That's a rise of 1.4%. The 10-year yield, 9 basis points lower, 464. The long bond, 12 basis points lower. These are big moves at 480 right now. And the jobs report tomorrow ahead of that, labor productivity advancing by the most in 3 years. So that's good for inflation. AI story. There is and I do air quotes, a new Beatles song that is out. Now and Then, written by John Lennon decades ago. AI technology finally allowing every Beatle to contribute to the finished song.
Have you heard it?
A good reporter would have listened to it before doing this story.
So no.
So no.
Dude, why don't you listen? Are you a Beatles fan to begin with?
Yes, I am. I would say I'm more of a Beach Boys fan than a Beatles fan, going back to Pet Sounds, because
it's genius.
It is pure genius, and Brian Wilson was here some years ago, and I just collect with him. So.
Yep. And that was in response to Sgt. Pepper, right?
I don't know if that was the case or vice versa. They both had great influence on each other with those albums. Rubber Soul, I believe, influenced Pet Sounds, which then influenced Sgt. Pepper.
Gotcha.
Jess Menton has no idea what we're talking about.
I do too. I'm aware of the Beatles. What are you talking about?
Very good.
You know, when I was coming in this morning, I saw JT turn the corner and he was singing a song. I'm not sure what song it was.
Oh yeah,
but
Tracks of My Tears.
Yeah, he was just kind of by himself.
Because I'm such a sensitive kind of guy.
Song. It was great. I was
Tracks of My Tears.
Yeah.
Can you give us a rendition?
No, I'd prefer not to on the air.
All right, John
It
Tucker.
was only for Jess.
Only for
Thank
Jess.
you.
Only for Jess.
I
John Tucker,
appreciate
thank you
that.
so much. We appreciate that. Matt Miller, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to YouTube and you can search Bloomberg Radio, and that's where you find us. Markets are ripping today. Now, I'm going to just call it right there. S&P up 1.5%. Lots going on. Lots of earnings. Lots of Fed speak.
It's the best 4-day rally we've seen since January.
Nice.
Yes.
I like how you put that in perspective. Perspective is important, Matt. Did you know that?
Yes.
Okay, very
Thank
good.
you. Jamie Berlin actually told me that superlative.
Oh,
but
I like that
He
one.
might have gotten it from Jess Menton.
Might have. Jess Menton joins us. She covers all the equity markets for Bloomberg News. Jess, what are you looking at?
Well, obviously the NASDAQ 100 up about 1.5%. So if you do look over the 4-session span over the last 4 days, it's up close to actually 5%, so that would be its best span since the end of May. Also, if you look at the S&P 500, 87% are advancing in that index, and while 13% are decliners. Of course, if you're looking under the hood, real estate's up close to 3%. Also, utilities up more than 2%. So clearly, search for income there. But basically, all 11 industry groups in the S&P 500 are higher. Wanted to point out some individual stocks I'm keeping a close eye on, because before we hear from Apple after the closing bell today, we did hear from Qualcomm yesterday. So ticker symbol QCOM. That stock's actually up 4% right now, a little bit above that, so on pace for its best day since May 30th. So this was a big key indicator just to see, because it's a key supplier to Apple and what it could mean when there is that concern about waning demand for some of these iPhones. But its revenue growth actually came in a lot better than expected for the previous quarter. And so that kind of gives some optimism when we are going into Apple's earnings ahead, basically after the closing bell today. But that stock, when you are looking at Apple, ticker symbol AAPL, up about 2%. So obviously the biggest weighting when you are looking at the S&P 500 as well as the NASDAQ 100. But this stock, even though it's up more than 30% year to date, it has peaked out since that July high. So it's still down over 10% of that. And then you are seeing kind of more broadly, even though we've seen some of these big tech and growth stock names sell off. Obviously, we've been seeing a big snapback here. And the S&P 500 back above 4,300. So recapturing that 200-day moving average and then getting closer to that 50-day.
Matt, if you type up SPX index RSI.
It's actually, the RSI is not yet back to 50.
I know,
so that gives
in
you
the middle.
Right,
yeah,
so
so you're getting
behind
closer.
these
It got
babies.
close to, actually, it fell briefly below 30 last month. And then that was the first time, actually, it had happened since September of
It was
last year.
oversold, right?
Yes.
So, and everybody
So
was
that line in
watching.
the sand-
Everybody was like, dude, the RSI says the
there we
S&P is
go.
oversold. Buy.
That's what Abigail Doolittle told me, and I did. Backed up the X3, and boom.
And also, during that same time period, if you looked at the number of stocks trading above their 50-day moving average for the S&P 500, at that point, it had dropped below 10%. So that was another sort of key threshold of a kind of near-term oversold condition. So that was what happened with RSI a few weeks ago, in addition to that. So now you're seeing still a bit of a snapback
Hey,
there.
in this tape, I could take any company public. I could do a follow-on offering for any of my companies yet. I don't see much coming out of my former colleagues on Wall Street. They're just too timid these days. Back in the day, we could rip these things out the door.
You know, we're going to get an update, especially with the recent companies that went public. So Cart, actually next week on Wednesday, we're going to get some results from them. And I hear Bailey Lipschultz is going to have a preview of those companies and what to watch for at the beginning of next week. So that's going to be key. And then obviously Kava, we've talked a lot about that. But we're going to get more indications on what those companies that recently went public look like in their latest earnings reports.
All right, very good, Jess Minton. Thanks so much. We appreciate it. Good stuff. Darkening the door here is Doug Adams. He's global co-head of ECM. That would be Equity Capital Markets at Citibank, one of my former places of employ. I used to run the street with Tyler Dixon. We would do deals. One day he called me up and he says, "Hey, I just took down a bunch of this Clear Channel stock. Can you tell me what how a radio company works?" I was like, "What?" I mean, that's the kind of risk we would take back in the day. Maybe stupid risk. But anyway, Doug Adams does, I'm sure, a better job than Tyler. Doug, thanks so much for joining us here. Appreciate it. Talk to us about the equity capital markets these days. It's a tough market, tough geopolitical issues. I'm sure the companies don't have a lot of confidence maybe in their forecasts or kind of just even the next couple of quarters. What are the kind of conversations you're having with clients these days about their capital structure?
I appreciate the opportunity to share our thoughts with you. And you're right, it's a complicated market right now. We're dealing with a number of issues globally, and there's a lot of uncertainty. And so clients are trying to manage their balance sheets, trying to manage their forecasts through that time. I do think we are expecting there to be some capital raising come in. There are companies that need to raise capital over the coming weeks and months. But as far as the IPO market, I think what we've seen in the performance, and you were just talking about it, some of the aftermarket performance hasn't been as strong as folks had expected or anticipated. And so in reality, we're probably waiting until 2024 until we start to see a bigger pipeline of newly issued public IPOs.
So does that mean 2024 is going to be a better year than 2023 for IPOs?
That's certainly what we're hoping at this point. I mean, it's been a...
What if we fall into a recession? Is it still, does it still look like it could be a good year for IPOs?
There are a lot of companies lining up, and a lot of them have secular growth as opposed to being exposed to cyclical aspects in their business. The one thing that we have seen, and we're tracking, over 1,000 companies private companies right now, and there's a lot of really interesting, really exciting companies. The real question is, when is the right time for them to go public? When are they going to get the reception, both at the IPO, but importantly, are they going to see the aftermarket performance? And that's been the biggest struggle of the recent vintage.
Some of the deals that came public, Doug, after Labor Day, had what they call marquee investors. Or I'm not sure what the term is. I never had them in my deals. Whatever that top allocation was, I gave Fidelity twice that amount, and I'm done. What are these marquee investors, and how's that come into it? Is that important?
Yeah, we refer to them today as kind of cornerstone or anchor investors.
Yep, that's the term.
And part of it is in a market that's reopening, like we're going through. Part of it is, how do I de-risk a transaction? Okay. And so those investors act in two things. One is they take some of the potential supply, and the second thing that they do is provide a validation for investors and give them confidence. A broader group of investors that people have done more work, they've met the company privately early on, and they're willing to go on the cover of a prospectus. And so that provides greater validation in the market.
So what's the, where are we in terms of the private equity business and the private credit business? Because it seems like companies can stay private a lot longer. There's so many sources of capital for them. They don't need maybe to go public as much as maybe they did prior. Where are we in that continuum these days?
Yeah. And so at Citi, we run our public and private capital raising all through our group in equity capital markets. And we are seeing that convergence, right? And so investors or companies are thinking about, where do I raise capital? What are the alternatives in the private market? What are the alternatives in the public market? And how do I think about that? And you're right, there are more alternatives today in the private market, but that's not a perfect market today either, as we've seen. I think that the real question for companies is there strategic value in being public? And what's the value? It helps in retention of employees. It helps that it's an acquisition currency. And for many companies, it helps from a branding event for them. And so there are different reasons to go public than just raising the capital at the time of the IPO.
I mean, how much have you, when you're looking at your employees, right, in your group, have you seen a shift from the amount of women and men you hire to take companies public and the amount of women and men you hire to give them money on the private side? I mean, you've been at Citi since like Nirvana, right? So
yeah,
the band. Okay, you've been at Citi since the early '90s, right?
I have. In terms of where people are spending their time, we've asked our team to really focus on understanding what companies' needs are, and then thinking about both public market solutions as well as private market solution. And so the teams are versatile to be able to talk to clients about the different alternatives that exist. And that's one of the things that we've been really focused on, is understanding the client and coming up with solutions that best fit their needs.
On the private, I know source of IPOs across the street of private equity finance companies, and you always are talking to your private equity clients about kind of what their needs are. There haven't been a lot of IPO activity for several years now. I would think the backlog from the big private equity companies are like, guys, you give me a 5-minute window. I got to get some stuff out the door because I need some monetizations. I need to mark these things. I need some gains to show my LPs. Where is the backlog, out there on the street these days?
I think there's no question private equity firms are evaluating their portfolio companies and trying to decide which are the right ones to exit in the public market and which are the right companies to exit in the private market. And they do that all the time. Yep. I think with a better functioning leveraged finance market, one of the things that has happened is the notion of a dual track process has become back in viable alternatives for companies versus just having one alternative. Having multiple alternatives always help those sponsors. But you're right, they are under a lot of pressure to return capital to their LPs as they look to raise the next fund.
Exactly. So what's it used to be back in the day, my day, we could take a company public with just a thought, an idea. Now you have to have revenue. You have to have profits. You have to have defendable franchises. It seems tougher and tougher. Where's the market now in terms of, if I wanted to bring my company public, what would you tell me I'd have to have?
we focus on companies that are either profitable or a clear path to profitability in the near term. And that's what investors want. When we're in a market that's reopening, you have to really open the market with the highest quality companies, rebuild the confidence that's been challenged over the last 24 months. One of the things going back to 2021, prior to 2021 or 2020, there was an argument that companies were staying private too long.
Yep.
And in 2021, everyone said companies are going public too early. And so finding that right balance, especially in a market that's recovering, it's not a straight line. And so starting with the strongest companies, rebuilding that confidence in the public markets, and then giving options to companies in terms of when and how and how large to raise capital becomes important.
Are there any sectors out there that you're seeing more or less demand from your clients? Hey, we want more energy, or we want more tech, or what are you hearing from your clients?
The clients are focused on growth, and quality of company. So I don't think it's necessarily
those two things didn't used to be the same thing, right? Growth and quality. And when you say quality, you mean like free cash flow, right?
Or profitability or path to profitability. People that have built a moat around their businesses and are differentiated. There's a lot of companies working on really interesting, as I mentioned earlier, strategies and disrupting traditional industries. But the real question is, have they proven that they can actually operate as a business as opposed to a plan in those areas? But we're seeing companies certainly in the software space, in technology more broadly. We're seeing companies in the consumer space. Healthcare has been one of the most active spaces in the capital markets. But we're also seeing companies in financial services, real estate, and others trying to figure out when will be the right time to access the public market.
Are hedge funds, where are the hedge funds in terms of buyers of IPOs or just new issues? How important are they to an underwriter like Citi?
Yeah, look, all the investors, the active equity investors are important. So long-only accounts, the mutual funds, hedge funds, all make up kind of the complexion of the investor base. And one of the things is we look at the IPOs that came post-Labor Day, it wasn't a demand issue.
Yeah.
Right? Those transactions were multiple times oversubscribed. The challenge has been the aftermarket performance. And part of that is, and regardless of whether you're a hedge fund or a long-only investor, the average or the typical active equity investor are trailing their indexes because the indexes have been dominated by a small number of stocks. And so if the stock isn't performing well, they can't chase that. In the aftermarket, they have to cut their losses rather than suffer.
Because I kept wondering, because I said, back in my day, I'd know where you're buying here, how much you're buying. So if the stock does fall, I know you're coming in to buy more. But it seems like we didn't see that this way.
Yeah, I think there's some technical factors and some fundamental factors. I think the technical factors is the underperformance by the active equity investor relative to their benchmark. And the fundamental challenge has been, the 10-year has moved pretty significantly since Labor Day. So the cost of capital for these companies has gone up significantly.
All right, Doug, great stuff. Appreciate you taking a few minutes of your time to come across the street and talk to us. Doug Adams, he's global co-head of ECM for Citi, my alma mater there. Well, more coming up. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
Paul, ride-hailing companies Uber and Lyft have agreed to pay New York drivers a total of $328 million in back pay. The story from Bloomberg's Charlie Pellet.
Steve, they will also carry out a series of labor reforms to resolve state investigations into their employment practices. New York Attorney General Letitia James says the companies agreed to offer paid sick leave, put in place a minimum earnings floor, and improve hiring and earnings notices, among other changes. James says under separate agreements, Uber will pay $290 million and Lyft will pay $38 million, all of which will go to more than 100,000 current and former New York drivers.
Thanks, Charlie. Shares of Uber currently up more than 6%, Lyft up more than 7%. Apple reports quarterly earnings today after the bell. Bloomberg's Ed Ludlow has a preview.
The expectation is this will be the fourth straight quarter of sales declines that Apple will see. And you have to go back 2 decades to find a slump like this for Apple. The iPhone 15 in the context of China will be a focus. The iPhone 15 went on sale September 22nd, meaning there was about a week left in the quarter of sales that will be reflected in the fiscal fourth quarter financial results. But the third-party data has not been good.
Thanks, Ed. Apple shares are up more than 1 3/4%. Ford's tentative contract with the United Auto Workers has received its first vote of approval. 82% of workers at a plant in Michigan supported the deal. It still requires ratification by Ford's 57,000 U.S. workers over the next few weeks. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Lots of green on the screen. Stocks heading for a fourth day in the green ahead of Apple earnings. That comes after the close of regular trading today. Friday's jobs report, also get that tomorrow. S&P 500 on track to climb for a fourth straight session as traders cheer signs that the Federal Reserve may forego any further interest rate hikes in this cycle. And among the best performing stocks right now, Starbucks, that's rising 10% after reporting sales and earnings that beat estimates. S&P 500, 62 points higher. That's up 1.5%. Dow Jones Industrial Average up 383 points, a rise of 1.2%. The Nasdaq 100 up 212 points, up 1.4%. 10-year yield 7 basis points lower. The 30-year, that's down 11 basis points right now. And also, let me do Crocs. They're slumping 7%. They reported weaker than expected third quarter revenue for the Hey Dude brand, cutting its annual forecast due to Hey Dude challenges. I don't know if that's a nod to the Big Lebowski.
I don't know.
The Hey Dude, I had
the Duderino.
It's
yeah,
not.
no, they
it
look
can't
Oh.
be no, because that would just be the dude, not Hey Dude.
Oh,
right.
Okay.
Although the shoes do look like the dude's shoes. I just Googled them, and they definitely look like, if you wear these
he was a
shoes,
Birkenstock guy.
you are an absolute slacker.
Okay.
Like,
This
you
is the guy
definitely,
who, in the
you definitely are not
grocery store-
employed if you're wearing these shoes.
He wrote out checks for $1.10 at the grocery store to buy cream to put in his drinks with Kahlua, right?
Yeah, as George Herbert Walker Bush was saying on the TV behind him, this aggression will not stand.
All right, John Tucker, very good. Thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Brokers studio. Matt, you're going to love this next segment. It's all about Ozempic and all those GLP-1 things that you're all down with. There's a thing, Matt, in the healthcare business called Obesity Week. It used to be a quiet annual meeting of weight loss specialists and a few pharma reps. But over 4 days in Dallas this month, it became clear that the new obesity drugs are changing that, along with everything else in their path. Lisa Jarvis joins us to break it down. Lisa is a columnist with Bloomberg Opinion covering biotech, healthcare, and the pharmaceutical biz. Lisa, can you put into perspective what these GLP-1 drugs are? How impactful are they? Where are we going with this stuff? Because it came out of nowhere, and that's all anybody can talk about these days.
Right. Thanks for having me. Well, yeah, they're taking the world by storm. That's for sure. They've been used, this class of drugs has been used for a long time for diabetes. And, you know, a side effect was weight loss. And so they decided to amp that up and, you know, explore the drugs for use just for weight loss. And the difference between what they can do and kind of all the older diet pills that existed is vast. You know, in the past, you know, basically what you could expect was at the most about 5% weight loss with some of these older diet pills. And it was often not sustainable. With Wegovy, which is Novo Nordisk drug, and with Mounjaro, which is Lilly's drug, still not yet approved for weight loss, but expected to be by the end of this year. You know, you're looking at somewhere between 15, even up to 25%. Some of the newer drugs that are in the pipeline, you know, for segments of the population, up to 30% of their body weight. So it's pretty dramatic, and needless to say, and it's really taken the world by storm.
I just want to lose like 10 to 15% of my body weight. But apparently, Novo Nordisk has put the starter doses on hold because they just can't make enough. And we asked the CEO today, Lars Fruergaard-Jørgensen, you know, what are you going to do about the supply? He's so cagey about it. He's like, we have a plan, but I can't like tell you about it. Which is why, if you're like boosting capacity at factories, or if you're making it in a different country, or like, why would you not be able to tell us about it? I don't get that.
Yeah, I mean, it's been an ongoing struggle with all of these drugs, the fact that they can't keep up with demand. I think the issue is less the actual ingredient in the drug itself and more the vials that they put it into. And so they've been really, you're right, cagey about it, and been really careful about allowing new people onto the drugs. The problem is, you know, there's this whole gray market of compounded pharmacies that are offering the drug. So people are starting on it, buying it from kind of telehealth places, somewhat sketchy, I would say. And
I heard a commercial yesterday on Bloomberg Radio on Sirius XM channel 119, and it was for what sounded like probably a pretty sketchy place, saying like, hey, call us up, we can charge this to your insurance, trust us. And I was thinking, cool, because it's $1,000 a month, right? Can they charge it, Lisa, to my insurance, or do I have to pay myself?
Well, that's the thing with these drugs right now. Very few people are able to get them covered by insurance, you know, because insurers are worried about how much it's going to cost in the long term if everybody goes on them. And the idea is that you take them for life. And, you know, that could be a significant burden to most plans, given the number of people in the U.S. who are of a body weight where they would qualify for these drugs. When it comes to the telehealth, they're often charging less, probably because they're getting it from a different source, and you're maybe taking it not in the pen form, and maybe you're having to inject the drug itself. It wouldn't be something I would recommend. I've written another column about that, that I think most doctors would say, don't do that. Just hold off and try to get it from, you know, the real deal.
This is, you know, Lars was telling us this morning too, because I said, dude, I don't care that much about stomach problems. I definitely don't want suicidal thoughts, which some reports have said, you know, that's a possibility, potential. And then I'm terrified of needles. And he said, you know, a lot of people like to go to the doctor once a week and get a shot. Is that possibly true? Like, I can't even get off my couch to go to the gym. I'm definitely not going to find time to go to the doctor.
You know, I think so. Well, you don't have to go to the doctor. You do it at home yourself, just like you do with if you had diabetes. Because the people who are taking Ozempic instead of Wegovy, Ozempic is the same drug, lower dose approved for diabetes. But there's good news for you in the sense that there are pills that are in the works that you know, could replace the need for needles. The weight loss might not be quite as dramatic. We don't know yet, but it could still be substantial. And some of those pills you might not even need to take as often as the injection. So there's a lot of different things that are in development, because obviously at a market that people are pegging at like $100 billion by 2030, everybody wants to get on it. So, yeah.
Is there any scenario, like I was going to ask you the size of the business, but that's a big size. Is this always going to be, or is this expected to always be a prescription type situation, or will there be an over-the-counter option at some point?
I think we're going to stick to a prescription for the foreseeable future, in the sense that people are going to want insurance to pay for it, and oftentimes with over the counter, that's not something that insurance always covers. But especially as we start to see this drug, more data come out for the health outcomes. So we're talking about weight loss, but Novo has offered some data showing that taking this drug can reduce the risk of heart attacks and strokes by 20%. That's substantial. There's a lot of other trials running trying to show other health benefits, whether that's chronic kidney disease, NASH, which is fatty liver disease, or even addiction. So I think probably we're not going to see it over the counter, and the market is just so potentially huge as a prescription drug.
And it's kind of odd to think about this to be a drug you have to commit to for life. I mean, it's one thing if you're doing that for a disease or something that you have to, but this is more.
On the other hand, dude, I'm committed to like Haagen-Dazs and Heinekens for life, right? And I might even spend less on Wegovy or Ozempic if I can, I don't know, like I don't know how much it's going to limit my cravings to drink alcohol, to eat sugary foods, to smoke cigarettes, but apparently it helps, Lisa, with all those things.
So far, anecdotally at least, it seems to be helping with all those, and it's now being studied as for addiction. So whether that's alcohol, other drugs, illicit drugs, or other things, but and we could think of sugar in that same way. I've talked to a lot of people who are taking these drugs, and they just, most of them say almost instantly, like within the first 24 hours, they feel a change in their kind of brain signals telling them to eat. And so I think some of the concern is more about making sure people are getting enough nutrition, to be honest with you, because for some people their diet is so depressed that they just they're not craving Krispy Kreme anymore.
That's the interesting thing is, a couple things. Can this reduce fat only and not reduce muscle mass? And then also, if people are smoking more weed, are they going to need this to counteract the munchies?
Well, fair enough. Although they might not desire the weed, to be honest with you, if they're taking the drug. So that's one thing. It's just hard. Everyone has a different experience with it. Some people just lose their desire for, whatever was their vice.
You look just crestfallen, Matt, on that news.